What's up, everybody? Just waiting on these markets to open up.
Very obviously.
I'm trying to figure out. All right, there we go. Get this audio playing. Boom.
Looks like stock futures are rallying here as we move closer to the opening bell, despite news that another 5.2 million Americans applied for unemployment benefits in just the past week. It's another record. Let's head over to Jared Blickery with a look at the world map. Good morning, Jared.
Hi there, Alexis. Yes, the data, they are bleak, but we are getting a bid in the futures just ahead of the open here. You can see the Dow is up about 0.2%. That's about 100 points. S&P up nearly 0.5%. NASDAQ up the most, 1%. And a lot of that strength in tech just continuing over from the prior days is because of those Taiwan semiconductor earnings overnight, giving the chip stocks a boost. So all in all, looking pretty good ahead of the open here. Overall, it was a mixed picture in Asia, but seeing some green in Europe as well.
All right. Thanks so much, Jared. And we're going to be back with the opening bell after this short break. Don't go away.
What's up, everybody? Y'all know what it is. I'm trying to set up my chat system on my laptop. I'm working on that right now. What I normally do is when I stream this, I have the news play on my secondary monitor, and then I pull the chat up on my laptop so I can read the chat. One day I'm gonna get an additional monitor, but until then, that's what I do. I finally got it up. Just making sure everything is good. Market's gonna open up in 1 minute. I can't wait to see how this works out. You know how they do it, man. The pre-market. There's not a lot of people that's in the pre-market. I mean, I do. I'm in the pre-market, but a lot of people don't have access to the pre-market. Only like when the market actually opens. So normally when the market opens, you start to see the price either shoot up or shoot down. That's because people spend a lot of money in the market. Like the pre-market people that's in the pre-market get pre-market and post-market prices, but a lot of people they don't have access to it, so they gotta wait until the market actually opens to start putting in trades or buys and sells, whatever you want to call it, calls and puts. So the market just
A new
opened.
trading day about to get underway on Wall Street with the opening bell at the New York Stock Exchange. And trading has begun, folks, and we want to welcome to the show Seema Shah. She is chief strategist at Principal Global Investors. We've got the Dow up, all right, a decent 40 points right now. Good morning, Seema. Good to see you. I want to talk to you about this possible disconnect we're seeing in the market. I mean, stocks are higher, not by much, but they are higher despite news that new home construction collapsed in March, down more than 22%. And now we have more than 22 million Americans having filed for unemployment benefits in just the past month. Staggering, stunning numbers during this pandemic. Why isn't the market selling off into that news?
Well, I think a lot of the reason is the very bad economic data that we're seeing now is very much priced into the market. So during the time in the last month where we're seeing those very significant falls, this is the time when you were seeing those economic forecasts being very much downwardly revised. Our concerns now is more really about the second half of the year. We think for that point, the markets are still a bit too optimistic, and we could see further rises in unemployment in the second half of the year, as well as a very kind of sustained and persistent economic downturn.
Seema, what do you think would take the market down? Granted, earnings season is just starting. The banks weren't that good, but I can't imagine the next 2 weeks we get any form of good news from, let's say, the industrial space.
Right. So I think that it's not necessarily going to be a focus on the economic data, because as I said, I think a lot of it is priced in. But what we could see is those earnings numbers, as we see maybe some of the banks continuing to put in quite significant provisions for bad losses, that will bring it home. That this is, this may not be quite the economic recovery that markets are expecting. But also the other thing is that I think that when we start to hear about governments lifting those lockdowns, as I think households realize that it's going to be a very, very gradual lifting, we're also expecting to see, household caution continuing to persist, maybe concerns about catching the virus or even concerns about their finances. And that will probably stop consumer spending from recovering in the way that markets may at the moment be anticipating.
To go along with spending, your theme on spending there, Seema, we're getting some breaking news from Hilton Hotels this morning. Hilton saying 12% of its hotels in the Americas and 60% of its hotels in Europe, the Middle East and Africa, and 15% of their properties in the Asia Pacific have temporarily suspended operations. Hilton now saying it expects it has enough cash to keep going for 18 to 24 months. And as I look at shares of Hilton, they just turned positive, up now nearly 1%. So what's going on here? Are our investors, have they basically priced in worst case scenario at this point?
I think they've priced in the worst case scenario for the first half of the year. I think that we know that, and that's one of the reasons why we expect markets to maybe be somewhat stable for the next few weeks with potentially some renewed market falls. I think the concerns are really about further out. And I mean, it's very good news from this perspective that Hilton's got enough money to keep it going for that longer time period. But there will be other companies that are going to continue to struggle with bankruptcy pressures. There's going to be households that are going to be struggling with finances. And that's where we expect to see some of the pain coming in. But I want to hasten to add that, look, compared to where we were 3 or 4 weeks ago, the situation is considerably better. And I think the policy help that we've had from the Fed, from central banks around the world, as well as governments, has really taken out some of that downside risk to the scenario that was in play about a few weeks ago.
Seema, is now the time to be looking or playing or investing in potential takeover targets? We had our parent company, Verizon, come here today, make a strong play for Blue Jeans, a video conferencing company. Just had Slack's co-founder on, Stuart Butterfield. They have loaded up on cash to potentially look at acquisitions. Is that the type of play where you should go all in now?
Well, I think the thing that we do know is that there are always going to be opportunities. So however bad the situation is, even if you think back to the global financial crisis, there are some amazing opportunities at the bottom of the market. Now, where we're focusing all of our concentration on is the high quality stuff. So as long as you believe it's high quality, that the balance sheet is strong enough, that you'll continue to have an income stream coming through, and that maybe it's pivoting in a way that will benefit from the kind of the new work environment, the new living environment that we're likely to be in for the foreseeable future, then I think it's
don't be too worried, y'all. Every time the market opens, it always drops like this, and then it makes a little, a little retracement in the direction that
all right, Jared,
it's supposed to go. So
got your eye on here 4 minutes into the trading day.
So it ain't too
All
much
right,
going
we're
on right
looking
now.
at a little
That's
bit of a rally
expected.
here, and
That's
I'm going to
usually
kind of
how it.
let
Like,
the
look, this shot
Wi-Fi
down.
interact, and we'll see what's going on
Like I think this
exactly.
is what it did
Taking a look at
yesterday,
the 10-year T-note
and it
yield,
came
it is a
back
little
up.
bit depressed
You know
right
what I
now. We
mean?
had a big
Sometimes they don't
drop
always
yesterday
do
of
this,
11
but
basis
when
points.
it does, it's going to
Usually
come
when
back
we
up.
see that happening, we see
So I'm
other
looking for
markets,
opportunities to get in.
especially
That's
growth
what
and
I'm looking
momentum,
for.
take hold. And it's actually nice to see some of the leaders here
If this
doing
keep
that. And if
dropping, if
we're
this
taking a
comes
look
down
at
to here
crude
and
oil
retest
right
right
now,
here, what's
that's up
this?
about 2%.
I might get back
And
in. Let
that's
me take
coming
a
off
look
of that
again.
dip into the teens that we saw yesterday. Still a lot of bearish pressures there. But let's take a look at the Dow heat map. We can see Microsoft and Apple both up. Microsoft up a
Actually,
little
I'm
bit
gonna
more,
take this
than
off. I ain't trying to get back
1.5%.
into that
JP
anymore.
Morgan under a little bit of pressure here,
See,
2%
Carnival.
down.
I like
And
the way this
if we
looks.
take
I
a
like
look
when.
at the
See, I got in
NASDAQ, we can
Carnival at
see
the blue line,
some of the bigger
998, and I also
leaders
got
here.
in
We're
at
going to sort of play
1095.
the
So I
Forex
love
and see the chip
I love to
stocks
see
really
Carnival
outperforming.
drop
And this is
and
on the
still be
heels
in
of
the
that
green for
Taiwan
me. Like that's the best
Semiconductor
feeling.
earnings
That means I
announcements
got
that
a
we
good
just got. They're
entry.
not in
That's
the
all that
NASDAQ
means.
100, but we can see in the upper left we have KLA
So
Tencor,
with that
Lam
being
Research,
said, if
Activision
I
Blizzard,
pull up the daily chart,
LRCX. All these names have been leaders in the
the
past, and
low
they're
would
starting to
be
reassert. So that's a
right.
nice thing to
I
see
mean,
here.
it
As I
didn't
said
really
yesterday,
establish a
Nasdaq
decent
had
low yet,
just
but
closed over its
let's see. Based off
200-day
the
and
4-hour
50-day
chart,
moving
the low would
averages, kind
be
of dipped below
maybe right
yesterday.
here. I give
So
this
we're
the
kind
low
of
right
at an
here
inflection point right now,
because it tapped
and we're
this
going to
line a
want to
couple of
see if
times
that can continue to
and
the
then came back
upside.
up.
We do have a lot of
So
overhead resistance
that's
just
cool.
above Alexis.
Jared, are you seeing anything in these work from home stocks? We just had obviously Verizon go out there and buy Blue Jeans, which is a Zoom rival. Slack Stuart Butterfield just told us, at least to me,
I got in this
business
one
seems to be going
yesterday,
pretty
so
well.
you know how they do. As soon
Yeah,
as you get
there
in,
was an initial surge
you
into
got
some
stuff for
stocks
the
like
drawdown for a
Netflix,
little
of course,
bit,
Amazon.
and
You might think,
then
well, money had to go
you're
somewhere if you
golden.
wanted to buy. Is this going to last? But you have a Netflix approaching its record highs. You have Amazon at record highs or near record highs, still up 28%. And then I just go back to the prior leadership of the semiconductors. Really nice to see them outperforming as opposed to simply some of the airline, travel, hospitality stocks, which were just kind of so sold that they got that junk off the bottom lift from the rally bottom.
Seema,
I'm
what do
gonna
you
keep
see
my
when you
eye
look
on
at the
this. I don't think
VIX?
it's gonna hit this
Are you
again though. I
expecting
don't even know why
volatility?
this did this,
To
but
rear its ugly head once again in a big way in the coming weeks, or
I'm
have
gonna
we
keep my eye
peaked
on it anyway.
in terms of volatility?
I think we've peaked in terms of volatility, and that's really thanks to the very strong and rapid policymaker action. A lot of what the
I
Fed's
wanted to
been
get in
doing
this,
hasn't really about economic stimulus.
this
It's
Bitcoin.
about liquidity provision and kind of taking out a lot of that volatility that was disrupting markets so much. And that's also another reason we don't expect to see the very, very big moves
See,
that
I
we
would have
have
made a
become
lot of money
accustomed
out
to
of
in the
this.
last few weeks.
What
That's okay.
about, I was
They
reading your
won't let me
note
get
and
in,
you
man.
point
Like,
out emerging markets and you
let
say
me
that
see. I need to
investors
call
should,
my
quote,
bank, tell them to stop
retain
playing with
some
me.
caution. Does that mean that there is
They don't want a
room
brother to make
for
money.
emerging
I
markets in
think
one's
that's what it
portfolio
is.
right now?
Oh, brother, make some money in
I'll be
Bitcoin.
honest, I think the outlook
We
for
can't
emerging markets,
have that.
it's going to be very tested. Aside from places like China
There
and Hong
goes that
Kong and South
retracement.
Korea, which have
Let's
already
see,
had
start right
their wave
here.
of infections, a number of these emerging
There
markets
goes
are
that
only starting to
retracement.
see the rise of coronavirus now. And for many of them, they've got very weak healthcare infrastructure. They've got a very large unofficial economy. So any government help simply doesn't reach the population. And even social distancing, lockdown measures can potentially almost hurt more people than the coronavirus itself. The other thing that we're seeing is that investors are starting to refocus on a number of the imbalances that a lot of these countries have, whether that's current account deficits, fiscal deficits, or even just over-reliance on oil exporting. So as a result of that,
See,
we're seeing that
Pepsi.
a
I
lot of
think
the EM countries
Pepsi.
are either
Let me
very
take this off.
cautious about
I was
spending,
looking
which
at
means that their
that.
household's going to suffer,
Tesla.
or if they're not cautious and they're
Let me
throwing
take
caution
that
to the wind
off.
and they're spending as they need to, their currencies are being decimated. So I think, we have to do, again, a case-by-case basis. We tend to
Yeah, this
prefer
is what
the
I was looking at
northern
right here.
Asian economies over some of the southern Asian, and Latin America does look
This is the
like
one
it's
I got
going to
my
be
eye
under a lot
on.
of pressure.
All right, Seema Shah, Chief
That's
Strategist
a
at Principal
That's a
Global
bullish candle right
Investors.
there, though.
Always a pleasure
Actually,
to have you on the show.
I might get in on
Thank you.
this. Let me see.
And stay with us. Coming up next, lots more show to bring you. We have got
Actually,
the
I'm
CEO
about
of
to buy some
XPO
right now.
Logistics, Brad Jacobs. He's going to be joining us. And a little later on, we're going to hear from Meg Whitman, CEO of that new streaming service, Quibi. Yep, there's another one. We'll be right back after this.
Hold on, y'all. I'm about to make a trade real quick. I've been looking at this one for a while. Hey, if you guys trade stocks or buy stocks, whatever you want to call it, just post it in the chat. I'm always down to listen, man. Quality. Hopefully, I got at a good spot. Yep, I did. Right after the retracement happened, too. Ooh, I'm good. Damn, I could have got it right here, but it was on my phone, man. Stupid phone. Oh, wow.
We've got a mixed market here in the early going, 11 minutes into the trading day. Dow is off about 100. Broader market higher. NASDAQ up nearly 1% right now. We know the trucking industry is, of course, a vital part of our economy, and it has taken a huge hit along with a lot of other industries during this pandemic. For an inside look at the trucking industry, the logistics industry, let's check in with the CEO of XPO Logistics, Brad Jacobs. Brad, good to see you again. I know you came out with your annual shareholder letter, and in it, you don't mince words. You say, quote, I'm a pragmatic bear in the short term because that's the reality of COVID-19. You go on to say, things are difficult right now, and they'll get worse in the short term. Then they'll get much, much better. When you look out, when will that much, much better come for XPO and the trucking industry in general?
Well, Alexis, it's not going to be in the second quarter. The second quarter, you have GDP predicted to be down 30 to 40%. The last time that GDP was down double digits,
I trade everything.
was in
What's up, man?
1958.
I mean, that's
It was
not
down
specific
10%.
enough, man.
So we're looking at a very challenging second quarter for the whole industry and for most companies all around the world.
I'm not
frankly.
trading these stocks right here, though. I'm just
People
buying
are
it.
expecting a
Like, buying and
V in
holding.
the third quarter. I don't know whether I'm a believer in that or whether it really would be the fourth quarter, but I don't know that it matters so much.
Oh, this is the
As long
other
as
one I
by
was
the end
looking
of the
at.
year, we're out of this. It's in the rear view mirror, and the resilience of the economy and the resilience of the people in Western Europe and North America, where we do most of our business, is shining again. And I'm confident we will. I'm confident it will.
Brad, you mentioned, good to see you again. You mentioned that consumer confidence in GDP won't come back really until 2021. Now, that leads me to believe
GBP?
there's some caution likely.
GBP
still, a lot of
what?
caution
What you talking
actually,
about?
for the holiday shopping season? What are you hearing from clients right now regarding orders? How are they thinking about their business in that critical period?
Well, I think GDP will come back and consumer confidence will come back this year. I just don't know whether I share the same confidence that it will be in the third quarter as opposed to the fourth quarter. Many people are saying 20, 25%, maybe 30% GDP positive in the third quarter, which would be fantastic. I'd be totally delighted if I'm wrong on that. I just don't see it yet. In my calls with our employees, with our customers, I don't see it turning to the better yet. I see it getting worse actually for the next couple of months. In terms of your question about the customers, depends which customers we're talking about. Our e-commerce business is booming.
Hey, I bought
Our
some.
food and beverage business
Hold on, I
is
bought my
booming.
PC set
Our
up
reverse
last
logistics
night.
business is booming. But most of the other
GDP.
business
Oh, I
lines
thought you was
are
talking about when you
soft.
say
They're
GBP.
getting
I
softer.
instantly thought
And if
Forex.
you look at the two
GDP.
different segments we
Is
have in
that?
our
Let
company,
me look at it.
our contract logistics business that we do in about 800
Give me 1
warehouses around
second.
the world is doing pretty well. And all the goods
Are you?
that
Is
are
that something you
coming
buying
in
and
that don't have
holding?
an end demand yet, they're being
Oh, you
stored in
say
the warehouse,
BRB.
they're being
All right.
repaired in the warehouse. The reverse logistics that's going to the warehouses, that's a very, very strong business. The transportation business, you see a lot less freight out there because people are in their houses, people are in their homes.
Right, last time we saw you was actually back in our studio in January, which feels like a lifetime ago. And at the time, you were talking about exploring strategic alternatives for some of your businesses. Any update on that? Since we talked, you had Costco go out there and spend $1 billion for the third-party logistics company, Innovel. Big purchase price leads me to believe there could be a lot of undervalued areas in your business still.
Yeah, so the strategic alternatives process to think about selling 4 of our divisions is totally off. That's completely yesterday's news. We're not pursuing that at all whatsoever. We're not actively pursuing M&A right now because we're very introverted, taking care of the health and safety of our employees. That's our main focus, is doing everything we possibly can to protect our employees, particularly our frontline employees.
You know, Brad, to your point, I'd have to think your employees are considered essential workers in the eyes of the government. Are they? And what are you doing? What steps are you taking to make sure those workers are safe? And also, it's a three-parter. Do you see you having to contract your workforce at all, or are you actually hiring more people to deal with sort of the influx of, like you were saying, e-commerce?
We're hiring in certain places, but we're furloughing and laying off in more places because there's less freight, there's less work to be done. I do believe that the workforce that we have is very, very motivated. We've come together. We found, there's a Yiddish word called koyach, and I use it only because there's really no English translation for it. The best word would be strength, inner strength, but it really refers to the power that comes from finding mental clarity to conceive of large goals and then having the willpower to materialize those goals and make them really happen. And that's what we found. We found as an organization our inner koyach, our inner strength. We recently last week we did our employee satisfaction survey, and I was expecting it to go down 100 basis points, 200 basis points. It went up. It went up 53 basis points. So once our employees realized that we had their backs and we totally care about their safety more than anything else, something very interesting happened. People rallied together and said, look, we are essential workers. We're the people who are making sure that you and you and you are getting your Purells and your diapers and your toilet paper and your household goods and the safety and medical supplies that everybody needs right now. We're the ones doing that. So we're on the front lines. And over the next 2 days, we're rolling out an additional incentive compensation plan for our frontline workers. And that's great. We're taking care of their financial health, but we're mainly focused on their physical health, making sure all forms of social distancing are taking place, all forms of hygiene are taking place. We're doing testing where we can. There's not enough testing available at the moment. So everything, in part of the survey, we asked everyone to brainstorm together. What can we do more to protect our employees? And we've got thousands of ideas that we're now in the process of prioritizing and assigning owners to.
All right, we're going to leave it there. I learned a new word today, Yiddish word koyak. That's a word of the day here, Yahoo Finance. Thank you, Brad Jacobs, CEO of XPO Logistics. Best of luck to you.
Thank you.
All right, believe it or not, folks, there is yet another streaming service on the market for you. It is called Quibi. What a time to launch a new service. And our own editor-in-chief, Andy Serwer, got to sit down with the CEO, Meg Whitman, recently. Andy, good to see you. Good morning. What did Meg have to say about Quibi? How's it doing so far?
Well, we talked about Quibi, which she launched with Jeffrey Katzenberg, which is a new mobile-only service with shorter pieces. Quibi stands for Quick Bites, and the jury's out on it, but a lot of people have a lot of time at home to watch stuff, so maybe there's room for it. Certainly a lot of other businesses doing that kind of thing, as you suggest, Alexis. I also talked to her about the nature of Silicon Valley, of course. Meg Whitman, a veteran executive in the Valley, former CEO of HP and eBay, and asked her, of course, this timeless question about whether or not these companies, the fangs, are too big and should be broken up. Here's what she had to say about that.
I mean, this is the history of Silicon Valley, right? It is one of those special places where companies beget other companies. There's consolidation, there's fragmentation. And so I probably would not necessarily be in favor of breaking these companies.
I want to try to put a buy limit right here. I'm at sell limit right here.
I think there will be new competitors that will do something.
I missed it, man, because I went to sleep.
Repetition of what has made Silicon Valley so special.
But gold is volatile, though, so I might do it anyway.
To running these enormous companies now that have such a, say over how we think about the world.
Right on the body of this candle.
Things, how we connect with each other. And, so I think the leaders of those
Yeah,
companies and
I'm
the
gonna do
culture of
it.
those companies has to be very mindful of the public trust that that they hold, you know, in their companies today. And that's, you know, that's a challenge. But I think that's the most important thing right now that these companies can think through.
You know, it might sound a little tone deaf to talk about the power of Silicon Valley right now, given everything that's going on with coronavirus and the economy. But, you know, let's face it, the FANGs are getting stronger for
Got
the
a couple
most
of trades
part
I need to add
during
to
this
this
time. We've
list.
talked
Let me
about that a
see.
lot. You look at Amazon, you look at Google,
Aussie
you look at
dollar.
Facebook, Netflix, the stocks are doing well, the businesses are doing well. So this debate about whether they're too big or not, while of course it's on the back burner today, could very easily get on the front burner again sometime pretty soon.
Andy, are restrictions on Silicon Valley a good thing or bad thing for the economy right now?
Right now, probably not. I mean, I think, you know, all bets are off at this particular point in time, Brian, just because, you know, we need them. I mean, you've seen Apple and Google talking about getting together in terms of fighting coronavirus with tracking software. Of course, you know, Facebook holds itself out as a company that's helping people mobilize and work together, et cetera, et cetera. And Amazon, of course, is, you know, helping the whole country and the economy feed itself and connect that way in terms of e-commerce. So I don't think now is the time, but you know, afterwards they're going to be in a position where I think Washington really has to revisit their status vis-a-vis the competitive nature of where they are in the economy and how much market power they have when it comes to their competitive set.
All right, Andy Serwer, thank you so much. And let's tell our folks that you can watch the full interview of Andy with Meg Whitman tonight at 5 p.m. Eastern on yahoofinance.com, as well as our app. All right, coming up, maybe one of your big challenges during this pandemic is how to get your hands on a Nintendo Switch. Thankfully, our tech editor, Dan Howley, will be along to talk about that. We'll be right back.
The prices will recover soon. Just take some time. Oh boy. Oh yeah, let me fit my other trades in.
With so many people stuck at home, no surprise to find that video game usage is going through the roof. But one of the things you just can't seem to find is that Nintendo Switch. Joining us now is our tech editor, Dan Howley. Dan, what is taking so long? Why the problem? And when might we expect to see the Switch back on store shelves?
Yeah, I think really what the issue is that they've seen an explosion in demand. There was a game that came out called Animal Crossing New Horizons. It's a franchise that people really love. And the Switch is a perfect device that you can just take with you, sit on the couch while your partner watches TV, or you can play it on the big TV. There's a ton of games in the Nintendo library. And I think a lot of people who aren't necessarily mainstream gamers who game regularly look at Nintendo and say, I used to play that as a kid. I might as well get the newest version of their console and pick it up. We're not going to see them probably until June again. They're in stock sparingly across different retailers, but if you can get one now, go get it. It's $299. We're seeing people price them up as far as $400 now on Amazon. Don't pay that. Wait till they're back in stock.
Dan, I got to go out there and buy some new office equipment first and foremost. But on the video game front, what are some of the top selling games right now?
Yeah, there's a couple of games that I want to highlight that people, if you're getting into games, you want to just pass the time while you're sitting on your couch. There's a few that I want to highlight. One is called Final Fantasy VII Remake. It's a remake of the original Final Fantasy VII for the PlayStation. Hugely influential game, Japanese role-playing game. That's out now. There's also Doom Eternal. I don't know if you remember the Doom games, the first-person shooters from way back when we used to have to load CDs or discs into our computers. That's out now as well. Basically just a big, dumb, heavy metal album of a video game. A lot of fun. Animal Crossing New Horizons, that's another where you build up an island. That's for Nintendo Switch. Amazingly cute game, very relaxing. I think a lot of people will be into that. There's Persona 5 Royal. My wife and I love Persona 5, so we definitely got this again. It's a 100-plus hours game. You play as a high school student, going to class, going to work, and then you fight demons in the afternoon, so why not? Then there's Call of Duty Warzone. This is a larger game where you drop in 150 people, similar to Fortnite, totally free. You can download it on PC, PlayStation, and Xbox. And then there's Ori and the Will of the Wisps. This is a side-scroller, 2D side-scroller, very difficult, but very rewarding, and you will cry when you beat this game. And then if you don't like those, you can get Sony's PlayStation Now service. It's kind of an a la carte for games. You pay a monthly fee. And then there's Microsoft's Xbox Game Pass, similar idea, pay a monthly fee, get access to hundreds of games.
Spoken like a man who has played them all. Dan Howley, thanks a lot. Enjoy. Thanks for the tips. All right, let's get one more check of the markets with Jared Blickery now. Jared.
All right, we're seeing a mixed market right here, and we're going to pull up the Wi-Fi Interactive. Now, the Dow is under a little bit of pressure, down 166 points or so. You can see the NASDAQ is up, tech outperforming with those Taiwan semi earnings earlier, and the S&P 500 now just underwater by a little bit. I just want to show you the last 17 days. This is since the low. We're still in this uptrend here, even though we are a little bit off today. So looking pretty solid there. We'll take a quick look at the Dow heat map before we go, and we can see kind of a mixed picture, but again, tech outperforming, Microsoft up over 1%, Apple up about 1/3%. To the downside, we see Visa down about 2%, Alexis.
All right, thanks very much, Jared. And of course, the big news today, the total number of Americans applying for first-time unemployment benefits in this country has topped 21 million. That's over just the past month during this as it nearly shuts down an entire country. Coming up in the next hour, we're going to take a deeper dive into the housing industry. How is it being impacted by this pandemic? Much more right after this.
Welcome back to Yahoo Finance Live. We're seeing the markets come under a bit of pressure again this morning here following some pretty dour reads on housing starts. Also continued to get mixed earnings results across corporate America. I want to get right to Inez Ferre, who's closely watching the markets. Inez?
And Brian, right now we're looking at a mixed picture for the markets with the Dow and the S&P down, but the NASDAQ in the green. I want to show you some tickers that are moving on the heels of earnings. TSMC, Taiwan Semiconductor Manufacturing. This company makes, of course, a range of chips for different products, and Apple is one of its clients. So that's why investors or analysts are really looking at the earnings for TSMC. Its first quarter revenue in dollars came in at $10.3 billion, an increase of 45% year over year. Its net income increased 90%. I want to show you a year-to-date chart. It's actually held up pretty well year-to-date. It's down only 9%. Today, you can see it's in the green. And its guidance, so with the company saying that moving into the second quarter 2020, we expect our revenue to be flattish as weaker mobile product demand is expected to be balanced by continued 5G deployment. Let's take a look at BlackRock. That stock is up more than 2% right now. Its adjusted quarterly earnings came in at $6.60 a share. Revenue increased 11%. Quarterly profit decreased 23%. CEO Lawrence Fink saying investors once again turned to bond ETFs in volatile markets, and also iShares sustainable ETFs had a record quarter with $10 billion of net inflows. And then looking at Morgan Stanley, that stock is down almost 2%. Morgan Stanley's earnings dropped 30% to $1.01 per share. Its revenue came in at $9.49 billion. Its wealth management division posted revenue of $4.04 billion in the quarter. And then looking at Bank of New York Mellon, up more than 3%. Its quarterly earnings came in at $1.05 per share, revenue of $4.1 billion. That's up 5% year over year. And the bank increased its provision for credit losses to $169 million. That's compared to $7 million last year. Brian?
All right, thanks, Inez. I want to get right to Keith Bliss, managing partner and CEO of IQ Capital. Good to see you, Keith. It's weird, certainly not seeing you in the studio, but thanks for coming on here. What interesting to me is we're getting some really dour reads on macro data. The earnings have started to trickle in, not so good, but the stocks aren't going down. What's happening here, and do you think all that sideline cash is getting ready to flood back into the market?
Well, that certainly seems to be the perception, Brian, out in the market when you talk to participants, both investors and traders alike, which I try to speak to frequently, is that their sense is that we've hit a bottom probably a couple of weeks ago. They're not sure, even with this, as you put it so perfectly, the dour macro readouts that we continue to get. It's just a continuous onslaught of bad news on that level. But they're sitting there waiting for themselves to pick their spots. So it would seem there is an awful lot of cash still sloshing around the system, as we've been noting for probably a couple of years now. And more cash due to be in the system. Clearly, companies are going to be ethically challenged, shall we say, to do buybacks with some of the stimulus cash that will probably find their way into their vaults. But that doesn't mean that you won't have other participants inside of this market doing that. So, yeah, it's quite extraordinary. I mean, forget about the macro data. We thought we'd never see something like this in our lifetimes. At least I didn't. And then when you couple that with the fact that the market just continues to not go down, or at least stay steady, is certainly giving us all cognitive dissonance. It's not what we would ordinarily see. So, my best guess is right now I have the markets at a neutral footing, trending higher, believe it or not. But again, time will tell. If we don't get this economy open in the next 2 weeks, then I think all bets are off on where anybody thinks this market is going.
I'm hoping you can talk about another phenomenon we're seeing here, Keith, and that is we've got the S&P 500 rebounding about 24% from its multi-year low just back on March 23rd. But at the same time, we're seeing safer havens like gold and treasuries rally. I've got now I'm seeing gold highest level in about 7.5 years. Treasury prices have also joined the rally. The yield on the 10-year note down to 0.64%. Why are we seeing that? Does this mean that stocks are rising but without investor conviction because we're seeing the safe havens rise at the same time?
Well, I think you kind of pointing back, Alexis, to a point that Brian was making, the amount of liquidity that's just in the system. And capital needs to get invested, especially if you're sitting inside of an insurance company or a pension fund or something of that nature. You're really very concerned, especially in this time. You're very concerned about how you're either going to meet premiums, meet the pension obligations that you have. That's an awful large slug of money that's coming into the market, and it will go to various places where portfolio managers feel like they can get a really good risk-adjusted, diversified return inside of their portfolio. So that is certainly sprinkling in equities, but also hedging their bets quite a lot in physical commodities like gold.
Keith, you made a key point just now before that this market might be rallying into the view that economies start to open again on the president's target of May 1st. If that doesn't happen, what's the downside risk to the S&P 500?
I think we go back and retest the lows that we saw in March for sure, and that will be the real Maginot line, if you will, for this war of attrition that's going on inside of the markets right now. I think that would be the safest call in May. The sell in May and go away will take on newfound meaning in 2020 if we get to that point. I mean, anybody who's been able to do it, including myself out here where I live in New Jersey, if you just ride around your local town, you can just witness the economic destruction that has taken place in just a very short amount of time. And listen, I'm still dubious how long it will take us to get back to the great levels that we were experiencing last autumn in the economy. But if we don't open it up in 2, maybe 3 weeks latest, I'm really don't mean to be Debbie Downer here, but I think that the economic destruction will be so intense and so immense that it'll be very hard to come back from. And therefore, you have to recalculate what the 12-month future cash flows discounted in the equity markets will be, and they will not be higher than where we are now.
So, Keith, if that worst case scenario that you lay out, that we're not coming back up and online in any way in the next 3 to 4 weeks, or 2 to 3 weeks is what you said, what happens to the stock market? I mean, do we find a new low for this market?
Again, I think all bets are off. Certainly we'll go back and retest the lows that we had in late March when the market was just sliding into oblivion and there was no bid to support it at all. I think that will be a given. We'll go back and retest those lows right away. We will get to, again, in my quantitative models, which you guys know I look at quite often and frequently, we will get back to a pretty supreme oversold state if we get back to those lows based upon the readings today. But if companies, large macro companies, as well as 90% of the economy, which are the smaller and medium-sized enterprises, some public, some private, if they keep reporting that they're laying off workers, they're not reopening for operations, they cannot forecast and estimate when they will have any kind of meaningful cash flow coming back, I don't even know where to calculate based on that if we get down below those lows. So I think that's really critical. And listen, the administration and business people around the country realize this as well. That's why you're hearing the noises and the drumbeat and the trial balloons that are going out from not only the federal level, but in some governorships about, hey, we've gotten through the worst of this. We'll figure out ways to maintain our protocols to maintain the health and safety of the public, but we do need to get back and reopen the businesses. We do need to open the restaurants. We do need to open the shopping centers. And I think there's going to be a real push. There's real friction, as we all know, and tension going on right now between some on the political spectrum, others in the business arena, and then just people like you and me who really want to get back to our normal lives. We'll see if that friction starts to abate somewhat in the next 2 weeks. And if we can get back and start reopening the economy, and it probably won't be in one shot, like it's not a binary event like closed and then open. My suspicion is that it will be rolling based upon the hotspots that have now started to alleviate some of this. But those will start. And the New York region, of course, is very important to that, as probably the largest microeconomy, maybe outside of California, that we have in the United States. If we start to come back online, then I think you'll see confidence start to spread around the economy, and that will be reflected in the markets, and then we'll just have to see what happens to the cash flows of the businesses.
All right, well said. Keith Bliss, Managing Partner and CEO of IQ Capital. Always good to talk with you. Please do stay safe out there.
Thanks very much. Great to be with you guys.
Before we head to break, make sure to tune in to Yahoo Finance at 11 a.m. We'll be speaking with Howard Schultz, former CEO of Starbucks, about how small businesses are handling the COVID-19 crisis. But up next, we'll dive into the latest housing numbers with the chief economist from Realtor.com.
All right, let's see what's going on. Still dropping. American Airlines. I want to get some more here, actually. I kind of want to get some more right here. This is a nice little recovery zone, too. Let me get some more. It tapped that line. It's going to shoot back up, actually.
Welcome back to Yahoo Finance Live. Now, the coronavirus shutdown is hitting the housing market pretty hard. Housing starts data this morning collapsed 22.3% in March. And the latest data does show fewer listings and fewer people have been out shopping for homes. Let's talk about it with Danielle Hale, chief economist at Realtor.com. Danielle, good to see you as always. The housing starts this morning, just not good. And as you assess the housing market, do you think there just won't be a spring buying season?
I think the spring buying season is going to look unlike any other we've seen. So as far as, the timing of all these shutdowns, it's really not ideal from a housing market perspective. Normally we see transactions really start to ramp up as buyers get out in the market in March and get ready to complete sales in the April, May, June timeframe. So, as far as timing goes, we are not looking at a normal spring buying season. And it's not just the buyers and sellers that are affected, it's the builders as well, as you saw in the housing starts data today. So it's definitely going to be a different year from the housing market. After a really strong start, the spring looked like it was going to be good, but that has changed.
Yeah, I'd say, Danielle, when you look at mortgage rates, though, they continue to be a bright spot because they continue to be quite low. I think the 30-year is around 3.5%. And the 15-year, which is popular for people looking to refinance, is a little over 3%. Do you think that when we come back on the other side, there will be this pent-up demand and we're going to see a spike in home sales because people who really wanted to go out and buy are going to go do that. People who want to go out and sell are going to finally be able to have a chance to show their homes.
Yeah, I think that is certainly a possibility. And the shorter the shutdowns are required, the easier it will be for the economy to snap back, or for those folks who are, waiting on the sidelines to get back in and keep that momentum of their previous search. The longer things are shut down, the more broad the economic damage from, job losses and loss of confidence on the consumer side and the business side, the harder it's going to be to restart. When you look at the demographics, there are certainly some positive fundamentals there. Lots of young people getting into the age where they typically, form a household and get out into the housing market. So there are a lot of positives as long as we can, keep the economy roughly on track to bounce back after this. I think the housing market will do well.
What's happening though right now on the ground, Danielle? Are homes being sold? Are deals happening? And what is that looking like? And what are the parameters in which they're happening if people have to social distance?
Yes, there's a lot of variation state to state. So in some states, real estate is classified as an essential service. In other states, a lot of the pieces of the transaction are more restricted. But you know, the industry is getting creative. There's lots of movement around virtual tours. You can walk through a house with an agent, lots of technology available to see different aspects of the transaction. And then of course, e-signature technology makes possible the closing, even if there is, you know, not an in-person transaction. That said, it's not as easy to complete a home transaction. And a lot of people don't necessarily feel comfortable buying a house sight unseen, though some do, especially on the younger side. But it's certainly made the process more difficult, but transactions are still happening just at a much lower rate than we would normally see.
Danielle, JP Morgan got some flack, or has gotten some flack recently. They're requiring 20% down payments on homes and requiring that you have a 700 FICO score. How does that action?
I got in again at that yellow line.
Like that from the big banks. How will that hinder the housing market recovery?
So it's going to be a retracement.
Yeah. So Alexis mentioned low mortgage rates. That's great.
I like doing stuff like this because that means when I get here, I break even with this trade and this trade. I break
the
even.
fact that we've seen pretty substantial job losses. Lenders are in a position where
I
they
don't
may
expect
be
it
on the
to
hook
pass
for,
that line too
principal and
much,
interest
only
payments
because
to investors in mortgage-backed securities.
they
So
have to
they're
pass
thinking
this.
about
So
their books, making sure that they are
hopefully,
able
if
to
it
meet
doesn't
their
and recovers,
obligations.
then
And that's really
this
led
may
to
be
a
a
bit of
new
a cash
low,
crunch.
which isn't
The Fed
too
has stepped
bad.
in to make lending
Which is
facilities
also
available
a
that
15
should
minute
help
candle.
open
So
up credit. But obviously, it's going to take some time to adjust to this period and for banks to get comfortable lending again. So that is going to create a hurdle, especially for buyers who are looking to finance.
Now, Danielle, we know that some lenders are trying to help their customers. There have been some moratoriums on mortgage payments. But are you seeing early signs of a spike in foreclosures? Is that happening? Do you expect there to be a big wave of that? I mean, certainly during the 2008 and 9 downturn, which was really precipitated by the housing market, foreclosures were, you know, going through the roof. What do you expect to see in terms of that this time around?
So we don't expect to see that this time around. In part, you know, the government has stepped in and required lenders to work with borrowers to get them onto payment plans and other sorts of mortgage forbearance. So that should avoid the onslaught that we saw in the 2008-2009 timeframe. That said, you know, the longer that we are in this period where, you know, millions of folks are out of work, the harder it is going to be for borrowers to stay solvent and to continue to make those payments. It's something that we could see if shutdowns last for much longer than they're currently anticipated. But at least right now, the system is really adapting and being creative. And instead of, you know, debating who's at fault for the crisis that we're in, they're really coming up with constructive ways to deal with it. It doesn't mean that, you know, it's without hiccups, but I think it's a much more constructive way to deal with it than it was during the financial crisis.
Danielle Hale, Realtor.com chief economist. Always appreciate the insights. Please do stay safe out there.
Thanks, you too.
From housing to tech, Alexis, trending ticker on the Yahoo Finance platform is Amazon, following Jeff Bezos' annual letter. Alexis, a lot to get to in this letter. Wasn't that exciting of a letter? I think Bezos has written more exciting ones in the past. But what stood out to me, they're ordering 100,000 electric trucks from Rivian. Now, keep in mind, Amazon made a $700 million investment in an electric car company in 2019. So that one among many things that stood out to me.
Yeah, also, I mean, this is a 4-page letter, but I think you're right. It didn't make a ton of news. I think the thing that stood out to me was that Jeff Bezos wants to test every single Amazon employee. And he wants to ramp that up so that they can feel safe about coming to work, because we know there have been protests. Workers have complained that they don't feel safe, that they feel like they're on their front lines without a lot of protection. So I think this letter on the part of Bezos went right to or tried to go right to the heart of that. I didn't really see specifics on how he's going to get all these tests. I mean, look, you know, everyday people are having a really tough time getting tests. How is he going to secure that much testing for his thousands of employees? So that was sort of left out in the
crazy,
open.
man.
And also a little
Facebook will alert users who like coronavirus hoax.
Other things they're doing outside of COVID-19, but it was mostly about the pandemic. Talking about what they're doing to protect their workers. And I think that's, again, a big reason why we saw this letter. Oh, no, the other thing he mentioned, I meant to say, is that they're trying to get rid of bad actors on the site. And he had talked about the numbers, you know, how many third-party vendors they kicked off the site because they see that they're trying to gouge customers, that kind of thing.
Alexis, yeah, good point. I think he has a lot more work to do in that regard because I'm on the Amazon platform, the prices they're asking to pay for third or fourth tier hand sanitizer and toilet paper is pretty ridiculous. But he also played up their fact they have raised wages by $2 an hour for employees. But I wouldn't.
No, the thing about this idea,
suspect that they
it
will
says
probably
Carnival
raise
might
wages in
sell
the market
ships
weeks
at
ahead. There is
reduced
such a
capacity.
competitive
I get where they're
dynamic
going.
going
They're
on
just
out
trying to
there
make their
for
money
retailers.
back.
Walmart, Target,
But
the
people
home
are
improvement
so
retailers have
worried
up their efforts to hire workers, and they're going to need a lot
about
more
this.
workers.
There's not
The
going to be that
only way
much
to get them is
people
if you pay them more.
that still take this offer. And if
Yes,
they do
Brian,
take
good
this
point, but
offer,
also you're in a situation where
what's going to happen is somebody's going to screw up. That's how they do it. Somebody's going to screw up. Because the thing about the temperature is, like, just because they check your temperature, like, that don't mean you got it that day. You know what I'm saying? So your temperature could be high. I mean, it could be normal, and then you probably get it, like, your body probably shows signs of it the next day. That's going to happen. And what's going to happen is somebody going to ruin it. It's going to be in the news, and this idea is going to go downhill. I don't know why they think this is a good idea. I mean, I get what they're trying to do with this, but it's going to be that one person that ruins it for the rest. And like Carnival, if it has a chance of coming back up because Carnival is one of the biggest cruise companies in the world. If you look at their, I can't remember what the terminology called, but there's a sheet that they go to that they have where it tells you how much they pay their employees, how much they spend in maintenance, and how much for buying new equipment and etc. And Carnival seems to be the cruise company that will outlast all the other cruise companies. The only reason why it tanked the hardest is because obviously the Diamond Princess was the Carnival, but it happens. You know what I mean? They took an L, so but they can recover from the L. Not everybody can recover from the L. That's why I believed in Carnival. It's coming back. Not only that, it's a chance for bigger gains. Anyway, because as you can see, I got in that. Well, when they first happened, I didn't know what was going to happen with the market. Nobody knew. So, I mean, here would have been the best time to get in, but who knew that this would have been it? Like, I know they say buy on your way down because you don't know when the bottom is, but this is the first time I've ever lived through a situation like this to even do that. You know what I mean? Like, I feel like it would have been my luck that I buy here and it would come all the way down to zero or something like that. See, I don't know. So I kind of waited for a recovery. And what I did the first time, actually, I bought right here and I sold it up here. And then I came back down. I bought here at this blue line. Well, not this blue line coming down, but this blue line coming up. And then I bought again right here. So I'm just hanging in there right now. So I have a position here at the blue line and a position here where the green and the red meets. So
Welcome back to Yahoo Finance Live. Now, cybersecurity experts and telecom companies are worried about Apple and Google's partnership regarding a new COVID-19 app. I want to get right to Alexis Keenan with all the details on this one. Alexis, I really enjoyed your piece now on Yahoo Finance, digging into this. What did you find?
Okay, so I spent some time talking with telecom experts, cybersecurity experts. They have some concerns about what they say is maybe a little bit of a hasty rollout of this program. So what it is it's Apple and Google, normally competitors, getting together to collaborate to enable what they call virus contract tracing apps to work across their respective operating systems. So what these apps would do, well, first off, the two companies would be giving app developers the ability to do this, right? So they would be able to create these apps for healthcare authorities, basically, regionally across the US initially. So this would allow users of these apps to do two things. One would be to upload their own diagnosis. If they receive a positive COVID-19 diagnosis, they can upload that into the system. The other thing it would do, would allow users of these apps to receive notices if their mobile device came into close proximity, and close proximity is 10 to 15 feet of another device that has already indicated that its user has a positive COVID-19 indication.
That's crazy.
So the way that Apple and Google explain how it's going to work, they say that the phones, if they have to have their Bluetooth enabled all the time for this to work. They say that the phones will watch for what they call proximity event, and the phones will be sending out these beacons over low powered Bluetooth, so that the phones can detect each other for these events. Now, the concern that comes in with, there's a few that come in with telecom and cybersecurity experts. They say, yes, this is a good idea in theory, but it's not necessarily airtight when we start thinking about privacy and security concerns. First, Bluetooth, I mentioned before, you have to have that turned on all the time. Now, experts say that technology is inherently insecure, which sounds pretty scary. In order for this system to work, it has to run on the phone at all times. Now, it's not going to drain your phone battery all the way down, because
That's not going to work either, because now everybody keep their Bluetooth
but
on.
nonetheless, it
For
does have to
one,
be activated, and your phone has to be fully powered on as well.
it's not a bad
The
idea,
much
but
bigger concern is
people
the
don't keep their
privacy
Bluetooth on,
issue.
man.
Now, Apple and Google,
I
they
mean,
make it
I
clear.
do
They
some
say
when
there's
I'm in the
no
car,
location data shared,
but you're gonna have those people who don't.
identity shared of the user who has signed up for this app. It is all voluntary, so these are not, enforced on any phone user, mobile device user. But if you start thinking about the notification area, that 10 to 15 feet, you can start imagining instances, maybe not
But it's
in
not
a
a bad
densely
idea. I like the
populated
idea.
city, but certainly as you start getting further out into suburbs and rural areas, where if your phone, one of these beacons goes off, you receive a notice, and you haven't been around too many others within a close proximity of time, that if your phone does go off, let's say you're walking on the beach, let's say you're in the grocery store, you get an indication, and now you can maybe deduce who that person is who caused that positive COVID diagnosis notice to go off. So that raises that scarlet letter scenario that will maybe cause people to want to turn off their phones because they don't want to be considered pariahs. Also, questions about HIPAA, of course, come up here. Although this is voluntary, I would imagine that you sign your life away in terms of privacy disclosures in that respect that would normally protect your health information. And last, this is a two-phase rollout for these apps. In the second phase is the more concerning part, where the companies want these apps to become preloaded, or at least the capability of the app to function, to become preloaded on their operating systems. And when you start thinking about the market share for Google and for Apple, with Apple having approximately 20% of the world's mobile devices running on their operating system, and Google's Android operating about 80%, you can get pretty close to covering the world's population if everyone were to have these kind of apps. So there are definitely some concerns there, and maybe this needs to be thought through a little bit more before it's just pre-installed on everybody's phones.
Yeah, I hear you on that one. Well, I encourage everyone to read your piece, Alexis, because it was really good stuff. Thanks so much.
Thanks.
And do stick around. We'll talk to the CEO of a company vaporizing viruses. Stay tuned.
Thanks, guys. Sorry I didn't leave you time for cues.
All right, so we at Carnival Cruise Line making retracement. Disney making retracement. Dollar Index doing stupid stuff like they always do. Euro GBP acting a fool because it's in the consolidation zone. That's what they do. Let's see what we got with Johnson & Johnson. Like nothing. GU looking crazy. Like this is a trade I got in other day. Damn, I could have got that thing all the way down. Oh, excuse me. Let's see. Damn, I should have. Let me see. I guess I'm cool where it's at right now. I'm gonna ride this up. I feel like I'm in a good spot. So this bounce up, I'm straight. Let me pull up the 4-hour chart. I got it in a good spot. So if this bounce up, I'm good. Oh, look at that. Would you look at this? This is a trade I got in. I got in this one right before the market closed yesterday. I just liked what I saw in this one, so I got in. So you gotta take risk in these markets.
Welcome
Like
back to
you got
Yahoo
more to
Finance.
gain
So
than
I've
there
seen
is
the
to lose.
market trying to stage some form of rally. Let's get right to Inez Ferre, who's keeping a close eye on all things markets. Inez?
And Brian, we're looking at some mixed markets right now with the S&P and the Dow in the red and the NASDAQ in the green, the NASDAQ being led higher by NVIDIA, JD.com, and Netflix. But you can see here the Dow components, Boeing being the Dow laggard, American Express also a laggard. And if we just take a look at a couple of tickers that are moving this morning, GoPro to the downside today, down more than 3% after the company said it's laying off some workers, more than 200 employees, cutting office space, shifting its sales to market its cameras directly to consumers. And this shift, of course, of direct sales will mean a stronger focus on its website. Year to date, this stock has really tanked year to date. Well, it's been underperforming for a while now, down 40%
This one
year to
right
date.
here, I'm
And
gonna
then if we
take
just
out.
take a look at
Let
Amazon,
me
this is a year to
see.
date of Amazon, or today's Amazon performance, up just 0.3
This looks
of a
real good.
percent.
This is a
Amazon is,
strong uptrend too.
excuse me, that's
That's
Apple.
what they call a V-shaped
Apple is
recovery.
reportedly working on
I
over-the-ear
like the way that
wireless
look. I'm gonna ride
headphones.
this
This is
one
an
out.
expansion beyond those AirPods that you use, Brian. Bloomberg reporting that the new device is apparently attached to a frame that's magnetic, so you can customize them and with leather type of fabric or lighter fabric. And the report, of course, comes after Apple had announced its lower price iPhone, the SE. Brian?
Ain't nobody trying to
More
buy no
stocks moving.
iPhone
Thanks
right
so
now.
much, Inez, for
Well,
that one.
don't
For
see.
sure.
Here's the problem.
All
People
right,
gonna
switching
be
gears, the
buy the
COVID-19
iPhone,
crisis has many people
and then they're
feeling
gonna end
more
up broke because they
negatives.
can't work,
We
and they're
all
gonna
wash our
blame the
hands a
president.
million times a day. That much
That's
is
they
for
do
sure.
stupid stuff
But
like
how
that all the
businesses make
time.
sure their
They're gonna
places
get
of
their
work are
taxes back
clean to their
plus the
employees.
stimulus check because they never seen
Enviromaster
money
is a
like that
cleaning company
before,
that claims to be
and then do
able
stupid
to
stuff with it.
eliminate bacteria from work surfaces.
Even
Joining
I
us
ain't
now
trying to
is
buy
Fox's
nothing. I don't
Pat
care what kind
Swisher,
of discount it
CEO
is
of
because I don't know what to expect.
Enviromaster. Pat, good
I
to
don't
see
know
you
what to
here.
expect. You know
Take
what I
us through your
mean? This is the
company
time
right
where you
now, what
got to
you've
be
seen
reasonable
in
about
terms
the
of
things
demand
you
ahead of this
decide to
crisis,
buy.
primarily.
You know what I'm saying? I don't care how good of a price something is. I'm not buying anything that I don't need unless I can make money from it. I haven't left my house in 4 weeks, and I left it Sunday. Well, I think I left it Saturday because I needed some food, and I left it Sunday because I needed to go to my parents' house for Easter. I'm saving up all my money. I spent more money in the markets than I spent on anything else outside of food. So people got to get it together and stop buying what they get when they get their last paycheck plus the stimulus check. You know what I mean? They're gonna go out there and buy these. Then their taxes. Some people probably done their taxes late. I didn't even do mine at all. But anyways, they're gonna go out and buy these crazy things and then blame somebody else for their lack of responsibility. That's what they always do. I'm not saying, hey, put your money in the stock market. I mean, that's what I'm doing. I'm just saying be reasonable and be wise about the money that you're spending. You know what I mean? That's all I'm saying. That's all I'm saying. You know, like if you got, like, even if you still an essential worker or an essential employee, cool. But who knows how long that's going to last? This is something that they finagling or working as they go. This is a work as you go type of situation. They got the essential employee thing because they feel like that's what they need to do, even though it's not really a good idea. But that's what they feel like they need to do. But what if things get worse? You don't know. Nobody knows. If things get to a point where they can only have maybe instead of 8 essential workers, they might reduce it to 4 or to 2 or something like that. You don't. Nobody knows. Nobody knows. But the thing is, what you do know is you can be ready for that. I'm ready. Yeah, I got my money in the markets, but I'm being wise. Before I start putting my money in the markets, I've done a lot of reading on when to get in, when to get out the markets. So I'm not just throwing my money in the market and hoping for the best. I'm throwing it in there when I see an opportunity. And I'm doing research on the news.
Supplying that either to all of our customers.
Oh, well, that's certainly good news that you're able to supply them. What about the number of employees? Have you had to hire more people to service the influx of business coming your way?
Well, it's interesting. About 3 weeks ago, or maybe 5 weeks ago, when this crisis first hit, a big portion of our customer base are restaurants, and they took it hard. And a lot of restaurants had to shut down. Some of them are still open that are have a robust takeout, such as Chick-fil-A and Texas Roadhouse, are two of our customers. And we saw a decrease in revenue about 30 to 40%. In the last 3 to 4 weeks, we've replaced all that revenue thanks to the media getting the word out of who we are and what we do. We're being contacted by essential companies such as grocery stores, convenience stores, doctors' offices, hospitals, police and fire station, first responders, nursing homes, those kind of establishments.
Pat, your business is a franchise business, and we've talked to a lot of franchisees who are having problems getting access to the government stimulus funds. Have you had any franchisees call you up, and do they need any of these funds? And if so, have they had difficulty getting the money they need?
Absolutely, they need these funds. In our case, our business is growing and our AR is growing, and we need funds to support that growth. Most of the franchisees I've talked to have not received any funds so far.
Have they applied, Pat, for the funds and they're just not receiving it, or they haven't gone through the process?
Oh, they've gone through the process. They just haven't received it. Now, I've heard from some of our employees that they've had checks deposited into their account, but we're talking about SBA loans to help businesses, and they haven't seen that money arrive yet.
Yeah, and on that score too, we're getting some breaking news. The SBA says it's, quote, currently unable to accept new applications for the Paycheck Protection Program based on available appropriations funding. In other words, they ran out of money. Pat, looking forward on your business, how will this situation think about how you grow? What are you thinking about over the next 1 to 2 years?
Well, I got to tell you, I've been in this business a long time, and I've never seen anything like this. And I believe things have changed for the good.
Let me see how this one looks.
If businesses are going to attract the public back, they're going to have to earn their trust that the business is doing everything they can to protect not only their customer, but the employee that works there as well. So I think our business is going to do just fine in the up and coming years. I believe we're perfectly positioned to take advantage of
Sucks that this one don't have a dividend yield.
To use electrostatic spraying.
It's all good though.
Decades, so we've
Still come up. Come up as a come up.
Companies in America.
All right, let's leave it there. Pat Swisher, CEO of Environment.
Right, this one up.
Tip to all the work you're doing. Please do stay safe out there.
Thank you. Thank you for having me.
And stay tuned. We'll have much more on the markets straight ahead.
I might get out right here at 16. Let me put my whole thing on here. Wait, this might be a new stock. That's probably why I look like that. Oh, this is a new stock. Got it. Nah, I'm gonna keep this. I'm gonna keep this. Let me look this up. I need to look this up. If this is a new stock, I'm keeping it. Oh, that's the term I was looking for earlier. Balance sheet. Yeah, that was the word. 2007. So it's still pretty new. Let's see. No, this company's still kind of new. It started in 2007, then it shot up, and no. I'm gonna keep this. I'm gonna ride this out. It's a new company, so it's worth it. As you can see, if a new company can survive this, I mean, yeah, 2007, but well, that's when they talked about it. So yeah, the company might start in 2007, but just because it's a new company, I don't think they get stocks right out the gate. They might gotta work for it and file paperwork and all of that. But for them to be a new company that survived this, that's not that bad. That's a good sign for me. So, because I was thinking about taking my money out because I saw they had no dividends. But for them, this company, that means this company has, in my opinion, I feel like this company has a future, a bright future. So I'm gonna stay in this company for a bit, even after the coronavirus.
Welcome back to Yahoo Finance Live. Now, as the coronavirus continues, companies and brands are looking for innovative ways to stay relevant, all the while struggling with budget cuts, company layoffs, and furloughs. Joining us now to discuss is Ad Age reporter Janine Poggi. Janine, always good to speak with you here. We had WPP, largest ad agency in the world, CEO Mark Reed on yesterday, and he was really hyping up TikTok. Are major brands allocating money to that? Can they allocate money to it?
Look, TikTok was huge before all of this sort of broke out. We had been writing stories almost daily about the opportunities in TikTok and just the interest in the app. Now, obviously with people home and more families, you're seeing more families participating in TikTok videos. I actually just downloaded it because I've never even watched one prior to this. And you're just seeing a lot more family participation, older generations getting involved. It's
Damn,
definitely
man, I
something
hate when
marketers are looking at and paying attention to, but
I
also given that people are home
was trying to get into
watching more
this one,
content,
man.
there are other spaces too, like OTT and streaming, that are certainly becoming more attractive
I was about
now
to
as
get in
people
right
are
here
hunkered
too,
down and
man.
watching more content.
And then the stupid
Janine,
thing won't
what
let me
about
buy it, yo.
companies who are
Let me
deciding
call
whether or
these
not they
people and
should
ask them,
even
man.
do any messaging right now? I mean, you could just say, look, we're going to go dark. We're going to let this thing pass and fly below the radar. Is that the right decision for these companies, you think?
So if you look back at prior economic downturns, it's been shown that advertisers who went dark during the period actually had a much harder time coming back. So the overarching thinking is that if you can still advertise. You see companies even like Uber, which, obviously you shouldn't really be in an Uber right now, with commercials out there saying, thank you for not being in Uber. And even if it's not about coming out and selling a product, which actually at this point, you shouldn't be out there necessarily promoting product. But if it's just a messaging about the company or giving back or talking about thanking, first responders and the people on the front lines, if you can still advertise, the thinking is that you should.
And how about logistically advertising?
There it
I mean,
is,
I, like
2018.
all of us,
Zora goes
I'm
public
consuming a
on a
lot
New
more
York stock
content than I
exchange.
normally
So it's
do.
still
And I
new.
am seeing
I'm keeping this
ads that look,
company.
they
I'm
must have
keeping
been
that
done,
company.
just hours, if not a day
Nah,
ago,
this is a
because
good
they're
company to
so
keep.
in the moment and responding to what's
It's
happening
just
during the pandemic.
these guys was
Are
on the New York
companies
Stock Exchange in
spending a boatload of money to
2018.
get those ads and scramble and get those ads
So
out right
that
away? How are
means
they even doing it?
So it's interesting because
the
obviously
people
we're
who
all
got in
remote.
at the
So a lot of
beginning
what needs to be done is being done
ate
remotely,
lunch
whether
for a
that's
bit, and
just,
then they,
taking
took
up
the
your
L.
camera
It's
the way we're
okay. It's
doing
okay.
here,
But
and
I think
shooting
this
things
dude, I think
in
right
ways
here,
like that.
where I
There's
got
a
in there right
lot
here,
of
I think I'm
real-time
golden.
movement animation has actually become a bigger deal, and looking towards more brands using animation. Toyota did something in Modern Family last week where they were supposed to be doing something with the cast itself, but obviously couldn't do that. So they had like an animated version of their ad. And I think we'll see, more of that as this progresses. But a lot is just using the technology that we have to do remote video and putting it together. I think what's interesting right now is there's an understanding. There's an understanding and an acceptance that this is the way things are. And I think that consumers are enjoying seeing more of things of people inside of celebrities' homes, and maybe things that aren't as polished and as well done as you would have seen just a couple of months ago.
Yeah, nothing like seeing those indoor pools at those mansions or all quarantined. Jenny, is there any sense or anything you're hearing that ad budgets open back up, let's say for the fourth quarter of this year?
I think that a couple of weeks ago was a lot of real time scrambling to figure out what are we doing with ad dollars right this minute. I do think that things are starting to calm down, but I still think that the outlook is limited in terms of how far we can look forward. I think one of the things that everyone is really hoping is that live sports come back in the fourth quarter. And I think if that happens, advertisers that can spend money will, because they will be looking to be in, football and college football.
Damn,
And
now
all
I
of the
wish I
things
bought
that they're
some more.
desperately seeking right now with
Oh well.
no live sports on the air. So I think the fourth quarter probably will be the first glimmer of when we'll start seeing, content that people perhaps will be looking to buy into.
And Janine, what about layoffs in the ad industry? And one thing that stood out to me when we talked to Mark Reed yesterday is they
If it come back and
started a
retest
review of
for
their
that low,
cost structure.
I
And to
get
me,
in.
I think he highlighted some pretty sweeping layoffs in the month or two to come.
Yeah, I think that those are inevitable. We're seeing furloughs, which I think are, perhaps just that first step towards more broader layoffs. Today, we had news at Ad Age of BBDO laying off some folks. I think it's inevitable that you're going to see layoffs, not just in advertising across industries, but in the ad world. There, as they struggle with even marketers making payments to agencies right now, that payment structure is going to be hit, and it's inevitable.
All right, Janine Poggi, Ad Age reporter, tag me in your first TikTok video. I don't know if tagging is even a thing in TikTok. I don't have it either.
I haven't tried it yet, but when I do, you'll be the first one I tag on that.
I know, we go way back. All right, Gene, stay safe.
Bye, Brian.
And do stick around. We'll be right back with the CEO of Stu Leonard's. Stay tuned. Welcome back to Yahoo Finance Live. Residents across the country have been told to shelter in place. People are working from home, homeschooling, and only leaving when necessary. One of those necessary outings, though, is to the grocery store. And now the CEO of one grocery chain is calling for these employees to be designated as first responders. Joining us now is that CEO, Stu Leonard Jr. of Stu Leonard's. Stu, always good to speak with you here. So why do you think grocery workers should be classified as first responders?
Well, I think it's tough for us right now. I'm out in the floor right now in the store every single day. I'm trying to set the leadership role up here as for our family. But it's very tough because you have customers, you're dealing with interactively at the deli counter, at the cash registers, at the butcher shops and the fish departments, and you're asking people to be face to face and as we know with social distancing, that's the one thing you don't want to do is be within 6 feet of somebody.
Stu, I can see from behind you, you look pretty well stocked there. You got a worker with a mask on stocking up some oranges. But I mean, when I go out to the store, and this is just my own local grocery store, it's still really, really hard to get paper goods. There are just some items that's nearly impossible. What are you finding right now? Are you able to get all items to your stores in a timely fashion?
You know, that's one of my biggest jobs every day. And we have 4 F's that we're focusing on. The first one is full shelves. Okay, we are doing everything we can. We're buying direct. You know, we don't go through middlemen or anything. So Stu Leonard's is lucky enough to get supply. I just talked to one of our ranchers out in Montana last night on the phone. He said, I got plenty of cattle. You know, so he's assured me we're going to have plenty of beef, you know, chicken, fish, fruits and vegetables, as you can see. So full shelves is number one. The second thing we're working on is flattening the curve. We have hundreds of thousands of customers shopping in our stores every week. And one of the things we can do through helping social distancing here, keeping everybody 6 feet away, we limit the number of people coming into the store to half of what we normally would. And we also are requesting each person come alone. So if you notice right now, you're not seeing a lot of family shop, which they usually would do at Stu Leonard's. The third thing we're trying to work on is friendly people. It's really difficult to motivate the frontline people today. You know, we're giving them appreciation pay at $2 an hour. We're giving sign-up bonuses of a couple $100 to get other people to work here. And I just heard you talking about unemployment a little bit. And I think the unemployment option is too attractive. We're actually having a hard time hiring people right now at Stu Leonard's. You think with the restaurant business, all the restaurant workers available, we have a flood of people to help us in our kitchens, but that's not happening. The fourth F that we have is to try to feed the first responders and the needy. You know, if any listeners actually, if any communities around Stu Leonard's that any of your listeners feel really need food right now, we'd love to hear from you. You can go to our Facebook page and copy that. So those are the 4 F's that we're focusing on at Stu's right now.
You're a great resource for all those folks who are definitely, and it's a real need, the need for food right now, Stu. You mentioned you talked to a cattle rancher in Montana. You know, you've got Tyson Foods, Smithfield coming out and saying they've had to shut down some factories because their own workers have gotten the virus. And there was a fear that perhaps we're going to have to start stocking up on meat because there's not going to be a supply. Do you see that coming down the pike at all, that perhaps we're going to have an issue getting meat?
You know, we've tried to be out in front of everything that's happening. Governor Cuomo, Governor Lamont, and Governor Murphy in New Jersey, we've tried to be listening and moving ahead. But the one thing I never anticipated with the COVID-19 is in the supply chain is the lack of production workers. Like Fred Wacker, who I talked to last night, a big cattle rancher, 35,000 head of cattle out there. He said, I can get the beef, but now there's not enough people in the packing plants to cut it, you know, and to package it for me. So that's where I'm seeing a little hiccup, and it's hard to predict. I think the meat companies probably have to give more incentives to their people to try to work, but the beef's there, you know, it's there. We have the shelves for it here. We just have to make sure everybody in the middle, from not only the packers, but the truckers, end up getting it out here to the stores.
Stu, bigger picture here. How do you think grocery shopping will change looking beyond the worst of the coronavirus pandemic? We've seen a lot of grocers put up sneeze guards at checkout. You see Walmart putting out one-way aisles. Is that a look into the future?
Well, I would love to talk to somebody about that, because I wonder, we used to have the big food buffets at the store. We had to close them down. We had big bagel display where we made fresh bagels and put them out in bins and you could go pick your own. I don't think that's going to come back for a while right now. We did a lot of food sampling in the store. We've stopped all of that. So the complexion of a grocery store has changed. Fortunately, we've always had a one-way aisle. It's wider than most stores, and and it definitely does help traffic flow and spacing. The question I wonder, and we've been through 9/11 here, right? We're right near New York City. It is going to take a while for everybody's mood to get done, but I don't think it's going to change until there's going to be a vaccination for this.
And Stu, before I let you go on a personal level, how has this situation been like? It's a family business. What has this been like for you to operate the family business through this type of situation?
You know, it's something I didn't expect to be as difficult as it is. Just to, we've always been in the Fortune 100 best companies to work for, and we really love our people. We have a lot of longtime people. And I find a tremendous responsibility to educate our people. We do a deep cleaning here at Stu Leonard's every night, and hand hospital sanitation and so forth. So the cleanest place our team members can be is here every day. But when they go home, it's the cell phone that they're touching. It might be the car door. There's a lot of other things you're touching. So these gloves, the only reason I wear them, and every one of our team members has to wear a mask, and now they're requesting customers to wear a mask when they come in, is so that you don't. The only reason I wear a glove is so it rains not to touch my face.
Yeah. All right, let's leave it there. Stu
Okay.
Leonard, Stu Leonard Jr. Stay safe out there. Appreciate you everything you're doing for shoppers.
I appreciate that. And I just want to assure everybody, I wake up every morning, I'm trying to get fresh food out on the shelves. And I want to keep the store looking like this for however long this goes on. But anyway,
we'll be in touch soon.
Be safe. Thank you.
Let's get right to Inez Ferre for one more check of the markets. Inez?
Okay.
And Brian, we're taking a look at a mixed market situation right now with the Dow that's down about 0.5%. You can see some of the Dow components, which are in the red with Boeing, American Express. But I want to show you the NASDAQ because the NASDAQ this morning is outperforming. Look at the NASDAQ 100, NVIDIA up more than 5%, JD.com, Xilinx, Amazon touching, of course, new highs, up more than 3%, almost 4%. Amazon's Jeff Bezos sent his annual shareholder letter saying that mass testing around the world is needed for coronavirus to get the economy back up and running. And he wants to test all his Amazon employees, including those that don't have symptoms. So certainly today we're looking at healthcare, consumer discretionary, tech. Those are the ones that are leading the gains, Brian.
All right. Thanks so much, Inez. And before we go, I want to highlight some trending tickers real quick. Slack shares are up 6%. We had co-founder and CEO Stuart Butterfield on our network earlier on today, striking a bullish tone on how business is going. So not surprised to see Slack shares nicely in the green there too as well. And our parent company, Verizon, is also a trending ticker, made a big acquisition this morning in Blue Jeans, a video conference competitor to Zoom. But do stick around. Well, much more on those stocks and the market more broadly straight ahead.
And good morning. Welcome to Yahoo Finance on this Thursday, April 16th, the day that the Paycheck Protection Program essentially ran out of funds. We're going to hit that issue, but we got the headlines today. Initial claims for unemployment, 5.2 million people. Continuing claims now at 11.9 million people. Essentially, 22 million Americans have filed for unemployment benefits in the last 4 weeks. That essentially wipes out all of the jobs which were created since the Great Recession of 2008. Again, the PPP is out of funds. Congress in a deadlock, trying to appropriate an additional $250 billion. We're going to touch about that in just a minute or two. The Philadelphia Fed Business Index, it was down to negative 56.6. A reading above zero indicates growth. The last reading was negative 12.7. National Pork Producers Council is calling on the USDA to purchase large quantities of meat. President Trump plans to release guidelines on his proposals or ways to relax coronavirus restrictions on businesses worldwide. We're going to hit all of these issues, but we want to talk about the way we keep people at least funded through this crisis so we can eventually get them back to work. And to help us do that is Howard Schultz, the former CEO and builder of the chain we know today, Starbucks. He is with us on Yahoo Finance, and this is the headline we're all going to talk about. $349 billion is gone. What next can we do if Congress isn't going to appropriate more money to help men and women get the money they need just to get through the crisis? Howard?
Well, thank you for having me. And I think, as you did so well, the headline today is the SBA and PPP is out of money. And I think, let me just walk you through what we have been doing in Seattle over the last few weeks and why I think this is so central to the issue facing most Americans today. In Seattle, the engine of the economy, the politicians are so well to speak about that consistently, is small business, the engine of the economy. However, small businesses and restaurants in America are now facing significant challenges. In Seattle alone, 3,000 restaurants are closed. 100,000 hardworking people, to no fault of their own, are out of work. So over the last few weeks, our Family Foundation and many people in Seattle have helped us raise almost $7 million. And with that, we've got $500 of cash in the hands of every person who applied for the loan. I'm sorry, not a loan, the cash. And we got $500 in their hands as a bridge. The interesting thing and the challenge here, most of the people we've talked to still haven't gotten any financial assistance from the government. Now, the bigger issue today is, as I talk to these restaurant owners and small business owners, yes, PPP was designed to do a good thing, but for those people who even got it, but most of them didn't, that is just a Band-Aid for 2 months. The question really is, how do these restaurants and small businesses reopen? So the government needs to face the fact that not only do we need a next tranche of money, but we need an understanding, a comprehensive understanding, that in order for these small restaurants and businesses to reopen, most of which cannot, we need a significant level of money. And from my perspective, the best way to do that would be if the government would be a backstop for the banks, and the banks can provide small business loans that actually could be forgiven over the year or low interest, and so these people can reopen. Now, the question I think you must ask yourself is, what is the economic carnage? What is the fallout if 40% of America's economy, small businesses and restaurants, do not reopen? The millions of people who will be unemployed, the economic carnage, it will be incalculable. And if we wait 2 months to get this done, it'll be too late. They will have closed their businesses. There will be no connective tissue to them. The government must act now, not for another Band-Aid, but a comprehensive solution to allow these people to reopen. That's the issue.
Howard, it's Julia LaRoche. And I think what you're pointing out that, small businesses really is the engine of our economy. And you talk about the rhetoric, yet it makes me wonder where the disconnect is here, because it just seems so glaringly obvious that you have to do something for small business. Do you just think that the government might be focusing too much on big business at this point?
I think the government tried to do their best, but it was rushed. It's not perfect. But yes, the way this thing has been structured, it is basically a big business co-authored program. Small businesses have been left behind. They have no voice. They have no resources. And when you sit down, as I have in the last few weeks, with restaurant owners and small business owners who either couldn't qualify for PPP or didn't get access to it, it is heartbreaking. They have put their life savings and their work into these businesses, and they have no way to survive. The issue right now, as I just said, is if we don't act soon, they will not be able to reopen. And so PPP was just designed for a 2-month ban. But what we need is a bridge to the vaccine. The vaccine is going to take 12 to 18 months. Small businesses in America need a economic loan, bailout, or some way to survive through the vaccine. That's the issue.
Howard, this is Julie Hyman here. At the same time, because of this frustration on the part of small business owners, some of them have said, we don't want to close, right? We just saw footage from that protest in Michigan where people were saying they were not going to abide by the shelter in place orders, which of course reflects some of what you're talking about, this frustration with not getting that aid. But what do you think needs to happen on the leadership level as well to get everybody on the same page, provide support at the same time? I mean, it's a tough job.
I think that's a very good point. I think many of the small business owners are complaining that there's no transparency and no understanding about where things stand. So if a governor of a state submits a tweet, and that's how people find out that they have to close their businesses or they have to put in place a mechanism to open up their business, and they don't know when it's going to happen, they don't know how it's going to happen. So these small businesses are in the dark in terms of when is there going to be a reopening of some kind, and what is the restrictions of how they're going to open. But the federal government and every governor needs to work together to create a system in which people could understand what the rules of engagement are going to be. But one thing is for sure, consumer behavior and the pattern recognition of the past is going to change dramatically once the economy and the country reopens. For restaurants specifically, this means that they'll be probably operating at 50% of capacity. They won't be able to survive. And so not only does the government need to understand that they need money to reopen, but they're going to need resources to reopen in this new world, or else they're all going to be gone. And I think 3 months from now, people are going to be saying, I wish I would have understood how challenging these issues were for these small businesses and restaurants. We would have done something different. Now's the time to understand we need to do something different now, and we need a bridge to the vaccine.
Howard, is anybody at the federal level or even in the business community, the U.S. Chamber of Commerce, speaking with you or having that specific discussion? Because even an additional $250 billion may not be enough to get us past the next 2 months.
Well, no, it's clearly not enough. This number has to have a T in front of it. This is $1 trillion number in order to save these businesses. However, the cost to these businesses and to the country of going out of business a year from now, the economic carnage will be much, much greater for a longer period of time than the money it's going to cost to help them. In terms of talking to other people, yes, I've talked to the governors of multiple states. I've talked to bankers of the leading banks in the country, and all of them agree with me. But we are not getting what we need from the federal government, and that is a understanding and a level of empathy and compassion that what they've done is great, but it's not good enough. And we need to step in now and solve this problem.
Howard, it's Julia again. You were talking about economic carnage. We just saw in the last 4 weeks, 22 million workers file for unemployment insurance. And it's only going to continue if we don't find a way to have a backstop here. My question for you, what do you think happens to the social fabric of our country? What happens to wealth inequality? What happens to capitalism as we know it now?
I think you just hit the real question of our time right now. And, I think in many ways, the crisis of capitalism has been camouflaged by the record number of profits and cash on the balance sheets of corporations, which even as we sit today is greater than it was post 9/11. The inequality issue is going to be so dramatic and so acute, much, much greater than it has been in the last 10 years as a result of a post-corona life in America. And that's why I think it's so vitally important that the people on the level of the banks, the corporations, government officials understand we're not just trying to solve an issue for businesses to remain open. We're also trying to maintain a level of employment for millions of people. And if millions of people are unemployed for a period of 6 months to a year, it is going to have a dramatic negative effect on the social fabric of the country. Exactly what you've just said. So the rippling effect of not saving these small businesses is much, much greater than the economic issue alone, which is unto itself paramount to the country. The social fabric issues are even greater than what could happen if these businesses don't survive.
Howard, can you share with us, and I realize you're the former CEO at Starbucks, but the Starbucks at a corner near me, actually, you can order on your phone, you can go to pick up, but they really don't, well, you can't hang out inside.
Sure.
So what is Starbucks doing for its employees who are working, providing coffee and some food for people who are going in, and how that model could be used perhaps by other businesses?
Well, the interesting thing for Starbucks is we were managing through this in China months before the coronavirus became a pandemic in the US. And so we had 3 months of understanding, in a way, how to navigate through this. And we had 90% of our stores closed in China, which have now reopened. And so we took those best practices. But the question is, first off, Starbucks is paying 100% of all its people in the company. No one has been furloughed and no one has been let go. Everyone has their health insurance. In addition to that, the health and safety issues within our store, there is a new strict level of protocol in terms of what we're doing, in terms of cleaning surfaces consistently, making sure everything is to a T in terms of the health and safety discipline. We're taking temperature of our employees and doing everything we possibly can to ensure the health and safety of both our people and our customers. But I think the question going forward is, what will life be like when the country reopens? And I think many people, many consumers are not going to feel safe and not feel comfortable. And every food and beverage establishment is going to have to establish a new mechanism to transform and refine their business in order to maintain the level of revenue and profit that it has in the past. It's going to be challenging for most businesses. I think Starbucks is already working on ways to do that, in which we come out of this very whole.
Howard, it's Julie again. I want to ask a little bit about what you've been up to and what you may be up to when we're all out of quarantine. And that has to do with politics, because I know that a presidential run was something that you were considering. So I'm curious now, do you support Joe Biden for president? Is there some way that you would want to be involved if he does win in the government? What are you thinking around politics these days?
Well, as a parent, as a citizen, and as a business person, I'm deeply, deeply concerned about where America stands today in the world and the current leadership within the White House. I will be supportive of Vice President Biden, and when the time comes, we'll do this in a public way.
Howard, Julia again. You and I have often talked about this idea of servant leadership. The mission of Starbucks when you started it was to nurture the human spirit. I guess this could go one of two ways. We could either rally and become more civil, or this could be more divisive. If you could predict what happens, what do you think happens? Do you think the human spirit wins here?
I've got great faith in the American people, and I've seen so many extraordinary, heartwarming events over the last few weeks in which people have stepped up to help others who are and the Plate Fund is a perfect example of that. We've had people donate $5 and $10. We had people who got $500 and gave back $50 in order to do something for someone else. I think we're going to rise to the occasion here. I do think it's a post-corona life for every American is going to be different than it was before. March 2020 is going to live in infamy, but I've got great faith and confidence in the spirit and humanity of the American people. I do think that we need the kind of leadership in Washington that is compassionate, that is empathic, that is honest and transparent, and most importantly, leaders who walk in the shoes of the American people and understand what a desperate, dire time this is for many, many Americans who potentially can't put food on their table, have housing insecurity, and this is not a time to kind of take a short-term view. We literally need a bridge to the vaccine for millions of Americans and small businesses around the country.
Howard, as we begin to wrap up, I'm curious, what advice do you have for each of us as individuals? There are stories in Manhattan and in New York City of people who are blessed to have resources, so they continue to pay, for instance, a cleaning person, even though they're not coming to the apartment to clean, or they're going and bringing in the hair cutter who's now on Craigslist to come cut the hair. Are there things that we can do individually to help others get through this financial crisis that you would recommend?
Well, I hate to give advice to other people, but what I would say is what I've said to friends of mine, and that is there's extraordinary levels of need right now for people and organizations that need funding and need support. When you look at these opportunities, I think it needs to hurt a little bit in terms of whether or not you're writing a check or doing something that you don't need. This is a time for all of us to do everything we can for people who are not in the position that we're in. And I think we have to give of ourselves, and it has to hurt a little bit because people are in dire straits.
Howard, one last question before we let you go. You and I, when we talked about the plate fund, I think it's worth pointing out, you've made sure that even the most vulnerable, even those who are undocumented in the restaurant industry, are taken care of, and they don't get access to federal stimulus. How can we ensure those who are the most vulnerable, don't fall through the cracks here during this crisis?
Well, it's interesting because what we've learned during the plate fund is over 20% of the recipients of the plate fund are undocumented workers. Many of them did not want to kind of raise their hand for fear of being identified. So we went through the restaurant owners to work through them so that the anonymity and protection of their privacy. But you bring up a great point. There are millions of people in the country who do not have access to federal assistance, who are really in tough shape. So anything that we do as a society has to take care of the most vulnerable and the most needy. And certainly the undocumented workers are a group of people who deserve our support. Thank you for bringing that up.
Howard Schultz is the former CEO of Starbucks. As they say on that old TV show, you gave us a damn good cup of joe. Thank you, sir. And thank you for your observations and advice here on Yahoo
Thank you for having me.
When we come back, we've got Hans Vestberg, the CEO of Verizon, with some major news and also his discussion with President Trump, that phone call. More after this.
Thank you.
Welcome back to Yahoo Finance. I want to let you know that our parent company, Verizon Communications, shares of that stock rising this morning, and that's on news of a $400 million deal roughly to acquire Blue Jeans Network. This is a company that is involved in video conferencing, much like Skype and Google Hangouts and, of course, Zoom. Joining us to discuss this and much more that Verizon is helping everyday Americans get through this coronavirus crisis is the CEO of Verizon, Hans Vesper. Good to have you here, Hans.
Good morning. Good to be with you today.
Tell us the Blue Jeans Network deal. They have, I was reading, 15,000 customers right now. With 5G and Verizon's lead in integrating 5G nationwide, how do you expect that to grow, and how will businesses use Blue Jeans?
So first of all, this is, of course, an enterprise-grade video conferencing that has been around for a while. Already used, as I said, by 15,000 customers. We have been working with them for almost a year in order to both introduce them as a product that we distribute, but now, of course, we're acquiring them. That, in essence, is, of course, to the customers, small and medium customers, and enterprise customers use them. But I also see the movement when we go into 5G, where video is going to be so important with the low latency and the throughput as a good add-on to our sort of universal communication. I see it also a good add-on for our Verizon Media Group over time, which is very much into video. So this is a product that can play in all areas of our company. Right now, focused on small and medium companies and some really large enterprises. And that we will, of course, maintain. But I see also attraction of how we build into our portfolio.
Hi, Hans. It's Julie here. It's good to see you. What I also find interesting about this deal is that reportedly you started talking to Blue Jeans last year. So obviously, before all of this began, before we saw this big surge in video conferencing, what can you tell us about demand for Blue Jeans product since all of this has begun? And how significant do you think it'll be for Verizon? What kind of customer base in terms of numbers do you think it will end up being?
First of all, I think that, as you said, we have been talking to them since May last year, and we actually introduced them to our portfolio in the fourth quarter last year to distribute it to our customers, because our customer was asking for it when they were doing digital transformation. Of course, with this pandemic that we have around us, the search for any type of video conferencing has gone up quite dramatically. But I would say that it fits into our strategy. This was part of how we want to build our Verizon Business Group. It's part of our 5G strategy. And as well, as I said earlier, it also fitting into our portfolio for our other units over time, the Verizon Media Group and Verizon Consumer Group. So it's actually a product that we see a great importance for our customers, and that we can continue to leverage both today and to the future. And of course, it's even more relevant today when so many people are using video conferencing 24/7 to keep up their businesses or communicate with their friends and families.
Hans, hi, it's Julia LaRoche here. I think what you're kind of getting at is future of work. I just conference for the first time using a video chat system. What do you think the future of work looks like, and how does this fit into that?
I think the future work, we will have some kind of new normal after this. First of all, I think the barrier for many things, how we use technology in our workplace, has gone down because of necessity. And I think that when everything comes back to whatever is called new normal, I think that we as individuals will use these technologies much more. So, of course, we believed in it before, these type of solutions. We believe it even more right now as this pandemic has spread, and seeing how the surge in our network. I've been talking about our VPN is up 50% in the overall network of Verizon. And of course, all of that is video conferencing going on at the same time. We can see it internally in our company. We have 50, 60,000 concurrent video conferencing ongoing during daytime between our employees actually doing their daily business. So yes, we're going to see that continue, and how deep and how far it will go, I don't know, but it definitely will be a total different workplace when we come back, and how we use these tools.
Hey, Hans, I'm curious about COVID and the national response to this. And first, there's been this conspiracy, I want to use the word silly, but this news that burning cell towers and 5G towers might somehow be behind COVID. It seems like fake news, and you need people like yourself, I guess, to address it to the conspiracy theorists out there. But I am curious more so about the president's response, because you've been in conversations with the White House, right?
Yeah. No, I think this has been nothing that has been up to be discussed. As you know, it's very clear. There's no correlation between the pandemic and 5G, and it hurts me to hear that people are burning sites in Europe, etc., for very critical infrastructure. There are people relying on this in order to actually communicate, first responders, healthcare workers, and all of that. So we just need to fight that immensely. And we have support from many of the health organizations coming out as well. And of course, anyone in my industry is doing the same as well. But that has not been a discussion with the White House.
So Hans, it's Julie again. I'm curious what has been the discussion from the White House, right? Because the administration came out with that sort of council to reopen list over the past couple of days. Your name was on it. So what does that entail? I'm not sure that there was sort of a lot of planning on what it entailed ahead of time, but what conversations have you had then? And what do you think reopening should look like?
First of all, the conversation was very helpful. I would say everyone on the call, which was a lot of large CEOs, large corporation CEOs. Everybody wants to open the economy as soon as possible. We know how important that is, but everyone also knows that safety and health of the citizen is coming number one. So the conversation was very much about what are the pharmaceutical companies doing, what are the telecom companies doing, what are the technology companies doing to see that we can open, but also talking about what is needed to come back to the work. And I think that sharing was very helpful to understand how others are thinking. So that was the main reason for the yesterday's call. So I learned how others are thinking, but everybody talks about testing, vaccines, which are important to secure our citizens. So it's going to be some sort of I think at least some sort of staggered sort of reopening of this country, as we see in any other country. So it's just common sense. We see that in Europe, some countries start opening a little bit. They have start fighting the COVID-19 better than others. Others have been totally shut. US is an enormous country, so there's going to be a staggered here as well. So, but I think that everyone is really leaning in from the private sector, see what we can do. And, Verizon do a lot. I mean, we continue to invest. We made an acquisition today. We have not closed. We have 30% of our stores still open. I have 20,000 of my field engineers out there together with our stores open. I have our media outlets getting out with media every day, if it's Yahoo Finance and media. So we have never closed down, but we're following strictly the safety rules for our employees. But we understand that we're so important. We just need to continue to see that our networks and communication works.
Hans, it's Brian Chung here. You're talking about what the private industry could do to help out some of those communities in need. I'm thinking about those kids who can't go to school, but they're in homeschooling in communities that maybe don't have internet, small businesses that don't have the infrastructure to be able to do some of the deliveries that some businesses are relying on right now. What have you learned about the U.S. telecom infrastructure, those communities in need, and how is Verizon trying to address it?
So first of all, what we learned about the network, that our network is really good. I mean, we have had such a surge in data in our network, 100% growth of gaming, over 50% growth on VPN. And remember, our network is enormous. 50% growth is just enormous. 800 million calls every day, which is twice the amount of Mother's Day, which is the biggest calling day a year. 9 billion texts every day, which is more than on the New Year's Eve. The network is standing up well, and our team is doing a fantastic job. So the network is fine, and now week over week, we see very small movements. Basically, no growth on gaming week over week. VPN very little. We saw a little bit of a hike in usage over the Easter because people were calling more, doing more video conferencing from home. But now it's a little bit more stable. Then when it comes to the most vulnerable in our society, I mean, healthcare workers or first responders, we of course see that they have priority in the network. For the education part, we have done a lot. We have increased the data for all our schools that we are serving, and then topping that with our agreement with New York Times. 14 million high school students are offered the content and the education content from New York Times for free. And then, of course, we have agreed to keep America connected, which means that we're not disconnecting small and medium businesses or residential users for late payments or things like that. So I think we do a lot of things on the society to keep the network up, priority the most vulnerable in the society. At the same time, having a network that is really working well. So it's a stressful time for everyone, and we understand that communication is essential in these times.
I want to wrap up with a couple things. I know that Verizon is giving discounts to frontline doctors and nurses and medical people on their wireless bills and their Fios bills. On a lighter side, because everything has been so urgently serious over the past 2 months, there's the concerts that Verizon is bringing to people nationwide, and Lady Gaga is going to headline the virtual concert. Is that tonight? Can you tell us more about the concerts, and are you a Lady Gaga fan?
So yeah, we do a lot of these from home. So we have two things happening. We do the Pay It Forward, which is for small and medium businesses, which is airing every Tuesday and Thursday night, which is all about paying forward to small and medium businesses. On Tuesday this week, we had 6.3 million attending, two gamers. Well, it was one gamer and one baseball player that was doing gaming. And the week before that, we had Alicia Keys with 4.5 million people. So we're doing that in order to see that people are paying forward. On Saturday, we have the concert together with WHO as well as Global Citizen, which is going to be aired on all large networks. And it's all about informing about COVID-19, and the best and most brilliant artists on this planet will attend our play. And Lady Gaga is sort of the host of it. I like Lady Gaga. She's a really good artist, and she's really pulling in her artist friends to do something great out of this. So tune in for that on Saturday. It's coming a lot of information out now. But it's things you need to do in this time, both entertainment, but not only that, seeing that you enlighten people about the situation, how to be more cautious, safety, health, in times which is, it's so unprecedented times, so it's hard to find a playbook for how you do this right.
Hans Vestberg, the CEO of our parent company, Verizon. We will all keep our poker faces during the Lady Gaga concert that Verizon's bringing everybody on Saturday. And thank you so much for sharing some of the details about the new Blue Jeans deal with Verizon. All the best to you, Hans.
Thank you.
When we come back on Yahoo Finance, we want to address this issue of the PPP program running out of funding. We have the CEO from the Consumer Bankers Association to help us understand the urgent need for Congress to approve additional funding.
You're watching Yahoo Finance Live. I'm Julie Hyman. As we talk about reopening the economy, there are reports saying that many CEOs are saying it has to happen with more testing. That could also involve antibody testing. That is, testing to see if people have had exposure to coronavirus without perhaps knowing about it. We're joined now by Chris Smith. He is CEO of Ortho Clinical Diagnostics. He's joining us from Denver, Colorado. And Chris, you all have developed such an antibody test. Talk to me about where it's being used and exactly how it's being used. Chris, if you're there, can you unmute for us, please? You just have to click the microphone on your screen.
Julie, I'm so sorry about that. Can you hear me okay?
Okay, no worries. We're all adapting to this technology. We hear you now, please.
Great. Well, listen, thanks for having me on the show this morning. And first, just want to thank all of the healthcare workers out there, as well as our ortho teammates that are on the front lines every day, helping to manage this virus. But you are correct, as you mentioned, we actually have brought a COVID-19 antibody test to market. As a matter of fact, we're in the process of bringing our second to market over the next couple of days. Our first test that we brought to market was really the first automated test that you can do large volume of testing for patients really across the country, but in our case also across the world. And as you can imagine, for us to get people back to work and get the economy moving, it's going to be really important that we're able to do large volumes of tests to ensure that patients have built up immune system or the antibodies to this terrible virus.
Chris, I'm curious, this is a blood test that uses a tube of blood, correctly? So it's not the kind of thing that you can administer to people as they're about to enter the workplace, or is it?
Well, it absolutely is a place where you could administer as you come back to the workplace. But you are right, it is a tube of blood. But this is a test that runs in under an hour. And one of these analyzers will run about 130 to 150 tests per hour. So you could do very large volume of testing, up to 3,000 to 3,500 tests per day per analyzer. So I think it's different than maybe what you thought about, Adam, initially, which was the molecular testing, which was a swab that you can now get done relatively quickly, there were days of waiting. But the blood tests are now starting to roll out into the market. And even though it's using serum blood, you can get results, again, in our case, in less than an hour.
My understanding is that even if you have antibodies, because we are still trying to grapple with our understanding of this virus, that antibodies don't necessarily mean immunity. So is there a danger it's going to give people a sense of false security?
Yeah, Julie, look, obviously, because this is a new virus, we're learning every single day, and we're working very closely with the researchers. Historically, as your body builds up antibodies, it creates an immunity to whatever that virus would be. So one of the things that's going to become really important in this testing is two things. One is specificity and one is sensitivity. What specificity means is that it identifies and prevents things like false positive. So if you were to go and have a test, you want to make sure that it lets you know whether there's COVID in your system or not, because that allows you to start building up immunity. And that's one of, I think, as you look at these tests, and you probably heard last week, there was some trouble, for example, in the UK, where some of their tests, they were worried about that sensitivity and specificity. That's going to be really important. But your body does start to build up immunity. But right now, the belief from a lot of clinicians is that is our best step forward on getting people back to work. We're encouraging people you obviously have to work with your clinician and understand what's going on in your own system. But historically, that's been the process of how we treat these diseases, is that your body builds up antibodies and that creates the immunity.
Chris, as we wrap up with you, curious if what governors or what businesses might be reaching out to you to bring this test forward to the rest of us?
Yeah, look, Adam, I think it's a really good question. I mean, we've been working initially with the government in Washington, obviously going through the FDA. I think what's going to be important is that these hospitals that have analyzers in them. So in our case, we're in over 1,000 hospitals in the United States and reference labs. It's really being driven by them. It's not being driven on a large scale yet by governors. I think as we learn more and as these tests become more available, I think we'll start to see that. But it's been very much been working with the White House and the FDA as this product starts to come to market.
All right. Thank you so much, Chris Smith, Ortho Clinical Diagnostics CEO. Want to bring into the discussion now the CEO of the Consumer Bankers Association. He's also the president. Richard Hunt is joining us. And the headline today was expected that we have run out of funds in the PPP, the Paycheck Protection Program. Are you hearing anything from Congress about getting the next 250 billion installment, Richard?
Well, Congress has to finish its job. It started this program to help out millions of small businesses. They allocated 350 billion. That's going to be 1/3 short. We're going to need about $1 trillion when it's all said and done. This program is very popular with small business men and women across the country. We've already processed 1.6 million loans, and I can tell you, we have 1.6 million small businesses waiting in the queue to get funding. So I am hoping Mr. McConnell, Mr. Schumer, and Speaker Pelosi get together today, now, to expand the funding.
Richard, it's Julie here. There's been a lot of complaints about this program as it stands, even before it ran out of funding, right? We've been hearing a lot of anecdotes about people who can't apply at their bank unless they're a client of the bank, who aren't getting answers even when they get their application through, who can't get the application through, who are finding the requirements too onerous. So it seems like it's not just about putting more money in it, it's about fixing it. How do we fix it? And is it up to the banks to fix it? Is it up to Congress? Is it up to the SBA? Who needs to fix it?
Well, we certainly in the banking industry are working 24/7. We have several shifts going on, 3 8-hour shifts, working day and night to get the system up and running correctly. Here are the facts. The SBA is not set up for an unprecedented crisis like we have. In an annual year, they have 58,000 loans they disperse. We just completed 1.6 million. This is an agency that usually distributes $20 billion. We're looking at $350 billion. The volume is off the charts. We never anticipated this many people needing assistance. So I assure you, between the government, the banking industry, we're all working together to try and help the American small business men and women have a Band-Aid approach. We understand people are suffering. The banks, community banks, regional banks, large banks, even fintech companies, credit unions, and fintechs are all working together trying to help the people out. But the bottom line is the money is depleted. We need to have a new allocation of resources so we can help the 1.6 million customers who are waiting in the queue today to try and get this assistance.
Hey, Richard, it's Brian Chung here. Great to see you. I want to ask you about the Fed's efforts. It actually just launched its liquidity facility to take on PPP loans from depository institutions today. And for those that are kind of wondering what that is, it means that they'll be able to take on those loans because at the interest rate being as low as they are, a lot of banks are saying it's not really profitable for us to
Had
hold
my
on to
mic
these.
turned off,
Has that
y'all. I'm back.
provided the liquidity for banks to be more adamant about going out there and underwriting these
Market's
PPP
looking
loans?
good.
We
Just
know
looking
that the
for
money's
more
already,
entries.
drained, so the demand
I
is
got
there.
into
But
American
has that really
Airlines
relieved the depository institutions
at
to go out there and underwrite these emergency loans?
Sure, yes, it helps.
1193,
institutions who are not used
and then
to
it dropped down,
small business lending.
and I
Look,
got
we
another
have,
entry at
I think,
1125.
3 million loans we're going to have to
So I think that was
disperse.
a really good
And there
spot.
may be some liquidity situations for some banks, but surely that helps to have a 100% guarantee from the
It
federal
looked
government.
like
There has to be a lot of underwriting still to be done for these loans.
at
Something
first
called
it looked
Know
like it
Your
struggled to
Customer.
pass this mark,
Well, we have to make sure we dot
but
the
this is
I's
when
and
the
cross the
virus
T's
first started to
to get it
happen.
done. But look, the bottom line
Let
is
me go
this.
to the
We
daily
need
candle.
Congress to do its job. They started this program, they initiated it, and we're thankful for that.
So it looked like it struggled to pass this mark at first, but of course, fear sank in because of coronavirus, which is why it passed it the first time. And then people start to realize things, so it came back up a little bit. I think I got a real good spot right here, actually. So this was a good entry, and this was a good entry. So even if it sits in this area right here in the middle, it'll break even for me. So I'm fine with that. American Airlines going to go back up in due time. I don't mind a little break even spot. I'm cool with it. Nothing wrong with that. And plus, I've only been in this stock for maybe like 2 days. What's the day? Thursday. So, sometimes when you first get in the stock, you got to learn how to survive the drawdown. You can't be scared, man. You can't be scared. And if it draw down too fast, depending on what kind of stock it is, though, you can't just jump in any stock. But American Airlines, I know it's coming back. So, the reason why I bought in right here is because I saw this candle right here. And I knew that it would retest this. So if it breaks this, then I'll probably be looking for another buy in this area. But it didn't break it. I mean, if it break it, which I didn't expect it to break it because American Airlines is going to come back up. Like, ain't nothing going on except people can't fly, but people already know that already. They knew that in here. That's why I went down. So, you know, it's one of those things where it says, tell me something new. And the only thing, you know, if you tell me something new, then I can decide if it's going to go up or go down. But ain't nothing new is going on. Except for people can't fly, but we already knew that. That's why this happened right here. So that's why I kind of expected to bounce off this little candle right here to the left. Also, speaking of tell me something new, this is what I mean right here. Let me see if I can find that. Right here. This is what I'm talking about. This is what I'm talking about right here. Now, this is America. I'm in America Airlines, not United Airlines, but America Airlines. But this is what I mean by telling me something new. You see this right here? United Airlines warns of job cuts even after $5 billion bailout. That's what I'm talking about. So you $5 million bailout and people still lose their jobs. This is what I'm talking about. This is the stuff I'm talking about. Now, I'm not saying that it's true because it's news, but news scare people. You know what I mean? So, yeah, that's the stuff I'm talking about. Let me see what else I'm in right now. Let's see. Carnival's still looking good. I know they say people can't cruise in a while, but if you watch my previous streams, Carnival had one of the strongest balance sheets for cruise industry. So I think I got a good spot here. Of course, I got an entry here right near the low. And I got another entry here, so I'm not worried about it. I'm not worried about it at all. Disney, I've been in Disney before it crashed, and then I got back into Disney, and then it crashed again. So I got an entry right here, which I thought was really good. And the only reason why the second entry is right here is because of the stupid watch sale. I didn't know anything about it until now. It's all good though. Then I have this trade going on, waiting on that to keep going up. Then I have this trade going on. I might close this one out though. ExxonMobil, let's see what this looks like. See, struggling to pass this one right here. But even if it passed that one, I still got to pass this one. ExxonMobil, this is a long-term one right here as well. I ain't too worried about that. This one, Zora. I like this. I like this one, man. I got in this one yesterday. Why? Well, for one, the company started back in 2012. It became a stock in 2018. And then, so there's multiple reasons why I chose this stock. One is technology. You can't lose for one in technology, right? Because this COVID stuff going on. Two, for a brand. Well, it's not. I'm not gonna say brand new. I guess brand new. For a brand new company to have a strong uptrend after this situation, that's good for me. That's good enough for me for a brand new company, and it's technology, so it's pretty good. And they have really good history. I did some research on the history on this as well, and it looked good. So I got in about right here. Then it shot all the way up. I mean, of course, someone will say wait till it comes down, but You know, I didn't see any signs of it coming down. Of course, yeah, it's just a bunch of green candles, and you would see a retracement, which is a normal condition. But the fact that this situation that we're in is not normal, I don't know what to expect. I'm sure nobody else does either. I got my eye on this one. I'm keeping my eye on this one. $36. What we at now? $36. I'm gonna keep my eye on this one right here. See what it does. Let me take a look at this one. Let me take a look at ExxonMobil. Oh, that's a minute one. I'm trying to trade off no minute one. $33. If it hit $33, I'll probably get in.
to their own devices, not yours, to see that you're remaining productive. And that's important because if you're sitting around with your laptop open for a while, they will know that you're not doing anything with it. There's also something important to keep in mind, and that's something like Microsoft's Teams or Slack. Now, companies are able to see exactly what you type in there, regardless of whether it's on your personal device, your smartphone, your laptop, or your company provided smartphone or laptop. They will hold on to records for that for some time. The same thing goes for your email, believe it or not. And that's because they need to hold on to those for records. And a little tidbit on the side for fun, if your company or you end up getting sued, all of that stuff can be subpoenaed. So make sure you're keeping all of your chats nice and work-centric and PG. And finally, I just kind of want to point out the fact that if you're using something along the lines of your work computer or your home computer and you're still typing away and browsing the web, it's really nothing to be too nervous about, because if your company allows you to visit websites that aren't blocked, chances are they know you're going to use their device for personal reasons. It's just important to know that anything that you put on that device can be seen. So, for instance, I did my taxes on my work computer. My company could see that. It's important to recognize that and be safe.
Dan Halley, thank you. More after this.
Well, I'm sure you guys are tired of seeing the same charts. I think I might call it a day after this. Hope you guys enjoy the stream today. If you guys want to see any other charts, just drop comments down below.
Quick market check, S&P 500 and NASDAQ positive right now. Dow off more than 75 points. More Yahoo Finance after this.
Well, there it goes. Accidentally closed it out.
The Chinese Communist Party, or CCP, lied, covered up the truth, and has put the entire world in danger. All the way back in early December of last year, the Chinese Communist Party knew what was happening, but they sat on the information for 6 weeks. In fact, they even arrested the people who tried to warn us of the danger, accusing these whistleblowers of spreading rumors, and used their censorship tools to prevent media coverage and to delete any mention of it from social media. So instead of being contained, this media blackout allowed it to silently spread, showing up in all of China and now the entire world. And because there was no transparency, people who might have been able to protect themselves instead became victims. All the while, Chinese state-run media has been pushing the narrative that the Chinese Communist Party is great, glorious, and correct, and they're now even blaming the United States of America for their own massive failures. And while right now people are debating what we should be calling this, to me it's rather simple. This is the name that we should be using. It clearly distinguishes the victims from the victimizers, because this is not the fault of the Chinese people. Chinese people are the victims themselves, just like the rest of us. It is the Chinese Communist Party's lies and their disregard for human life that has placed the entire world in jeopardy. And amidst all of this craziness, you need a source of news that you can trust to keep yourself informed. And I would highly recommend The Epoch Times. We tell it like it is, and we have been exposing the communist and socialist influence in China, as well as in the rest of the world, such as in the US, over the last 2 decades. In fact, 20 years ago, our staff of reporters and editors inside of China were arrested, jailed, and tortured for reporting the truth. This forced us to develop a system and an underground network of sources for getting real news out of that country. And because of that, amidst this crisis happening right now, our team is able to report the real situation. Among other things, they've been contacting individual funeral homes and hospitals in order to get a more accurate picture of what's really happening on the ground. And we report it all without politicizing the situation. Instead, we present you with the facts, the figures, the numbers, the context, and the analysis so that you can make up your own mind, form your own opinion, and keep yourself and your family safe. So click that button below and try the paper yourself for a full month for just $1.
Specifically is 22 million folks who are out of work and filing for unemployment insurance. We're going to talk more about all of this right now. Over the next hour, I'm going to be joined by my colleagues Adam Shapiro, as well as Melody Hom and Dan Halley, Right now, though, we're going to go to Jessica Smith in Washington for more details on the news from there today. Jess? Jess, you just need to unmute yourself. Sorry. Happens to us all.
Sorry about that. You'd think I'd have this down by now. But first, we want to hit those jobless claims one more time. 5.2 million Americans filed for unemployment benefits last week. And while that is a devastating number, it is lower than what economists had expected. They were looking for 5.5 million. And in the last 4 weeks, the number of unemployment claims filed reached 22 million. So in the past month, the coronavirus has effectively wiped out the job gains over the past decade. Now, President Trump is eager to get people back to work, to get business going again, and we do expect him to issue new guidelines today about reopening the economy. The guidelines would be for U.S. governors as they try to get their states ready to open back up. In addition to the roughly 200 industry leaders that he is consulting, or that the White House says is advising the president has also set up a task force of lawmakers, a congressional task force focused on reopening the economy. The president did speak to those lawmakers on 2 conference calls this morning, and we do expect the president to also talk to governors today via teleconference at 3 p.m. That is closed to the press at the moment, but that could always change. We expect him to give governors an idea of what this guidance is going to look like, these new reopening guidelines, and then we could learn more details about what those guidelines actually are during the press briefing at 5 this evening. Julie?
Jess, thank you. Appreciate it. Let's talk about what all of this means for markets and what kind of knock-on effects to economies we could see down the road. We're joined now by Rick Bunicor. He is NAI Capital Managing Partner. He's joining us from Cleveland. So, Rick, as we hear about the PPP running out of money, as we hear about the plans to start to reopen the economy, perhaps, although that hasn't really happened yet, we see markets that are now, at least for the moment, sort of